Thank you. So next, we have fireside chat. And the topic is debt recovery and resolutions, challenging the status quo with technology. And to proceed this, we have Vipin V, partner BCG India, as the moderator, Rishabh Goyal, co-founder and CEO Credgenics, Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited. Can I have all of them on stage, please? May I request the moderator, Vipin V, sir, to kindly take it ahead.
Hello. Thank you so much. So maybe I'll start with a quick anecdote. So as part of my engagement, I've been advising one of the leading NBFCs in India for the last 4 years. And a couple of years back, we were having a strategy discussion with the chairman and MD and so on and so forth. And we were discussing about lending business. And they told me a very interesting thing, right? They said, all of you think that we are into lending business, but actually we're not into lending business. We are into collections business. That's what we do. Lending is very, very easy. You open the tap tomorrow, there will be thousands of customers who are ready to come and take loans from you. But collecting back from them is a difficult task, right? And in this context, over the last 2 years have been one of the most challenging times for the lending companies in India, including NBFCs as well as fintechs. And within NBFCs or within lending business also, if I look at it, collections function is or are the people who face the maximum challenges on two fronts, right? The kind of flow which we saw in terms of delinquent accounts was crazy, and the operating model changes which they have to go through to adjust to or adapt to the COVID situation was again not unseen or not unprecedented, right? Now, in this context, maybe I'll start with Kunal. So, considering that you are from an NBFC, in the post-COVID era, what kind of how do you see the portfolio evolving now? And secondly, what kind of operational challenges have you seen during COVID and now, and how are you solving it?
Yeah, thank you so much, and good afternoon, everybody. See, if we try and divide the NBFC era into two phases, pre-COVID and post-COVID, there are two large changes which have happened. First is that the portfolio, which was earlier having a cash flow which was measurable, the customer base which was earlier being there, they were not relocating to places, or their business incomes were their business avenues were also stable. Now both these things have basically changed. So the post-COVID era has seen that the cash flows of the same customer base has become erratic. You don't find that the cash flows are still coming in a seamless manner like they were coming earlier. The second is, we saw a lot of people going back to their home bases. So the kind of a customer base that we have, where about 75% to 79% of my customer is new to COVID era started, there was a lot of government reforms which came. But in that COVID era, it was not the challenge of people not being able to generate money. It was more of a fearsome era because people were not even aware of how to deal with COVID. 2020 or the first wave of COVID was, generating a lot of fear in people, but they were still, trying to cope up with it. The 21, which is the second phase, brought in a lot of, the issues in terms of people, a huge amount of death rate which was there. A lot of people were also saving money because they didn't knew what is the kind of hospitalization expenses which will be there. So these two COVID waves were also very different if you see the comparison. And then you see the countermeasure which the government had announced. In COVID, one wave, the government had announced moratorium followed by restructuring. In COVID 2, there was nothing that the government had announced. But now let's understand, how this affected our kind of industry, which is NBFC sector. There were people during moratorium stages who were given 6 months of advancement of, their loans, and there were people in restructuring which were given, a further advancement. So, the portfolio which used to be, running in a seamless manner suddenly saw a break of, a continuous flow of income which was coming in. And the collection efficiencies had dropped in the first stage to almost around 20-25%. And then slowly, obviously, picked up. Then the moment it started picking up the momentum, the second wave struck. It again went down. And, the other side of it is disbursement was also down. There was no demand. So, we are into commercial vehicle segment. So there were no new demands which were generating. So as an NBFC sector or as an NBFC, we were hit with three kinds of, challenges. One, our customer itself had a issue of, health related issues or COVID related other challenges. His cash flows were getting impacted. So that is from the customer side. The other side was that our collection efficiencies were moving up and down. The third side is that, there was no new disbursements happening. So that's how basically as a sector, we faced, one of the largest challenges, during that point in time. And, we are happy that we have passed hopefully that challenge, although the numbers are increasing now again. And, again, the risk management hat comes in on the top, and, we are trying to envisage the stress scenarios again. But hopefully, the government will be able to take care of it this time.
Yeah, but we understand or we appreciate many of the things you said, because that was well discussed as well. I think what are some of the operating challenges you see in collections at this point of time? And as an NBFC, what are some of the steps you are taking to tackle them?
From a collection efficiency standpoint, there are, again, if I have to club them, I would say 3 or 4 different challenges. First, let's start with the collection strategy itself. Right, the strategy has to be very, very clear that whom do you want to collect from a physical mode, and whom do you want to collect from a a telecalling or a soft collection mode. Because now that the things have become even tougher, and the portfolios are also seeing a lot of stress, as we saw the NBFC portfolios are right now under some stress. And this stress, if you notice, is coming from 2021, I think, second quarter onwards. And I mean 2021 FY, second quarter onwards. So therefore, there is a lot of challenge that we are facing in terms of our margins. Therefore, the collection strategy has to be very, very, critical and to the point that, okay, this is the percentage of portfolio where we want to do, soft bucket collection, and we don't want to utilize, physical mode of collections. And then wherever we try, and wherever we have tried but we are not succeeding, we will go for a physical mode of collection. So first and the foremost thing is strategy. The second part is within the the soft bucket collection, there are 3 ways of collecting it, what we have learned of this particular stage. One is we can do the traditional call center calling, and people can do all these callings, and then try and get a P2P or a payment from the customer, or non-contact. It's a traditional way. Then the alternate ways which have come in is basically connecting to the customer through digital ways. Because one blessing in disguise that COVID brought for the industry and as a country and as for the entire globe is it has increased the digital revolution for the for the general public. So again, coming back to our customer base, which is basically largely NTC, and they are not very digitally savvy. They do not have very large digital footprints, but they will have some or the other ways of connecting through digital, maybe WhatsApp, maybe some other GPS contacts and all those stuff. So we utilize digital modes of connecting with the customer through SMS. These SMS were earlier used to be, very easily in English, but in this way time we started with vernacular and SMSs. Then we started with, connecting with the customer over, the voice bots. Though we were not able to succeed much around that, but I don't see any failure as a failure. I see every failure as a learning. So we understood, what we need to do over there. So, but anyways, for the industry, where a lot of behavioral based loans are being given. In our case, we do a lot of viability based loans. So the voice bot does not, work for us, but it will work for a lot of behavioral based loans like PL customers or credit card customers or, two-wheeler customers. So, but, in that solution, the voice bots will work is what my assumption says. And the third, which was very interesting, what we started to do is also map the customers in a from their geopolitical, from the geotagging perspective. So we knew, again, understand my customer is moving all across. If he's a truck driver, he's moving intercity. If he's a small commercial vehicle, he's moving intracity. If he's a three-wheeler driver, he's moving intracity. So from geotagging, we came to know where the customer is at this moment. For the customer base which had migrated, we knew that he is not even in his local place where he was earlier, but he's gone to his hometown. But my spread is across 1,500 branches in India. So we sent those people to his hometown, asking him that, is he capable enough to pay right now? Or does he want actually for us to, repossess his vehicle? Because the moment we are saying repossession, his earning is gone. So, but we tried using these three ways: the traditional calling way, the voice bots way, and for the physical one, we enabled the geo tagging so that we are able to connect with the customer to the nearest possible scenario.
Understood. So Kunal, like Kunal said, I think one of the silver lining of COVID was the pace of digital adoption across all business functions, right? Now, Rishabh, considering that you have a startup which focuses on the more digital collections part of it, how do you see the last couple of years evolving, or how did it go for you guys? And then secondly, how do you believe, or how do you think fintechs or the latest digital technologies can enable better collections?
No, actually, I think both very relevant points which Kunal mentioned, and I think you also started that lending is a collections business. Obviously, it's easy to give out money, but collecting with the interest is actually the business part of it. So I think earlier, if you see, right, the whole focus of everyone, like whether it's NBFCs, fintechs, was to solve for the underwriting, was to solve for sourcing. And that is also actually a big problem because there was a huge segment which was not being catered by banks, traditional banks. And that obviously India's in terms of credit penetration is maybe at 20% of what it should be if you compare with any developed economies or with the West. So there is obviously a problem of sourcing and actually figuring out. But when we say that we have solved the problem of sourcing underwriting, it essentially means that we have a little flexibility on the underwriting policy, right? Because the banks were not giving loan to the same category of people because of XYZ documentation. Now we have given out loans to them. So if we have actually compromised on one aspect, we should have at least a strength on the other aspect. So the other aspect remains collections. Like if we are able to build some core competencies, which allows us to actually tell us that like at least now we have given loan to XYZ, but we have the ability to collect or at least predict what is going to happen. So I think then the core competency has to lie on collections. But I think as also Kunal mentioned, the blessing in disguise, COVID enforced digitization across the segments. And the reason for enforcement obviously was that once the volumes which essentially were anticipated will lie in the default segment, it was impossible for people to do it. There's like, you cannot manage 1 lakh accounts with 100 member call center. So it was impossible for people to reach out. Hence, I think digitization was the need of the hour. It was essentially that you didn't have an option, so you had to adopt it. But then obviously there's no going backwards, right? If you are there, you adopt it once, then obviously you could see the merit of it. Though I think also agreed with your point that it is not a pure digital play which can actually solve the problems. How we saw the industry evolving, I think we saw that at least all these basic reach outs, this filtering of data and everything, right, there is a lot of data which you can generate out of just digital reach outs, right? At what point in time borrower responds, which channel is the best to reach out, what is the most preferred language of communication. All these things essentially can be figured out by digital channels, like by WhatsApp or voice bot. You can do that. It's not necessary that a caller has to call him to understand all these aspects, and that is a more scalable way. And also the extension to that is the cost of collections. I think here the whole thesis, like also, if my cost of collection goes up, my underwriting will become expensive. I'll any which ways pass it on to the borrower while new underwriting, right? So the cost of collection was also one parameter which was being focused by digitization. And here what we have seen, that digitization has happened as an extension of the physical world. It has essentially reduced the pressure on the physical collection, though physical collections are here to stay. I would not say that they are going away anytime soon. But with the adoption of digitization, I'll like to throw some facts, right? Also, with when it comes to internet user or in rural India specifically, I think there are 650 million internet users with active internet, and also 450 million roughly WhatsApp accounts, active WhatsApp accounts. So it essentially means that the penetration of internet and with the mobile essentially is happening there, and NBFCs are leveraging that to dispense loans, like loan over WhatsApp, right? All these things are happening. But when it comes to collection on a WhatsApp, that is not happening. So that is something, no, you have to actually go there, meet him and collect. So that is a typical mindset which obviously will exist for some time, but it is changing. It is changing for the good. And we hope that at least this digital wave on the collection side would also surpass. And we have seen encouraging responses across the banking segment, and people are ready to change.
Yeah, thank you, Rishabh. I think one of the things all of us agree is that India is not moving to 100% digital online collections anytime soon. So the physical is or digital is going to stay for a slightly longer time, right? So in that context, from both of you, it will be good to hear how can latest technologies, digital or technology interventions can enable the field force or the collection team or collection field force in a much better way so that the collection efficiencies can be improved. Maybe we can start with Kunal and then we can come to Rishabh.
Yeah, I think the term that we just concluded our corporate plan a couple of days back, and we've introduced a new terminology. Like every time it happens, you have to introduce something new in the corporate plans to encourage the members over there to see what is the new terminology. So the new terminology that we've come out with is something called as phygital, which is a mix of physical way of doing things and then combining it with the digital enablers which can be there. So essentially what we have tried to do is that we've tried to create models in our business, in the corporate office, sitting in the air conditioned office, to try and enable things for the people who are going on the field, who are actually sweating themselves out, and then going there, meeting the customers, and then coming back with either a P2P or basically, non-traceability or customer not available. So those were the challenges that we envisaged. We said that, we want to be absolutely on the mark when it comes to the physical team trying to reach out to the customer. So let's try and take a challenge that all these attempts where we are not able to meet the customer, those attempts have to come down by 50% just to start with. Because you have to keep some goal in mind and some parameter in mind, when you're enabling something. The second is when it comes to P2P customers, we try to analyze the behavior of these P2P customers and analyze it over the period of, let's say, past 1 year to 1.5 years. If they're consistently saying that they are going to promise to pay to us at a particular point in time, are they actually paying? If they're paying, we know that it is just that these customers need a reminder for somebody to remind to them that you need to pay to us. So to get our own money, we have to tell them from them that you have to pay to us. So for those customers, we tried and eliminated the physical touch points. We said for those customers, we will try and contact them through the digital format and remind them with folded hands that you have to pay back the loan that you have taken, and then monitor whether the payback is in the similar range of what it used to be when we used to do it in a physical manner. So that saves us the cost of physical collections in that portfolio. The second is where the customers need a push, where somebody needs to meet him physically, but there are multiple attempts, and then only we used to get the payment. And in those multiple attempts, we found that customers were not available at a point in time, and there was a lot of to and fro's which were happening. Let's also understand a physical, aspect where our collectors also not all the time go and meet the customer while we get to an understanding that yes, they've gone. That may also be a challenge. So what we need to do is we need to geo tag them. And whom do we geotag? We geotag the collector and we geotag the customer also, and understand where is he and where he is trying to be, and then basically try and see if there is a solution which we can come up with where we can try and merge the two, and the person can meet the customer at a particular point in place, and then try and establish a connect that if he is meeting, then he will be able, that's an assumption that he will be able to collect. So that is the second intervention. The third intervention that we took for the feet on street was, the entire incentivization piece, because let's not forget that is the way that these guys earn. So we tried and gave him an incentivization, like you have seen the Uber and Ola models. So when there is a peak hour, you see that the rates go up. Correct. So we have also told them that these are hard bucket customers. If you collect from them, you will get more incentivization, and within the same range, there are also some soft bucket customers, because you're passing that particular area. If you want to collect, you can collect from them also. But if you collect from a hard bucket customer, you will get a higher payout as compared to this thing, and the gap was significantly higher. So then it depends on him if he wants to basically, go and collect from a soft bucket customer, maybe 1, 2, and 3. His fuel cost will be, reimbursed from that collection incentive. But when he goes to the hard bucket customer, he earns over and above, what he's expected, and that becomes his saving. So, these are some of the factors, which we tried to use, or we are trying to use rather. Let me be honest, we're trying to use, and hopefully we see some success in them.
Yeah. Rishabh, any thoughts on this?
Yeah. No, so actually I obviously think that for like field, like wherever, like in the thesis is that using any technology, right, like in collections for example, let's try to automate whatever is possible, let's try to remove manual intervention wherever possible, and wherever it's not possible, let's try to improve the productivity of the people involved there. So when it comes to the feet on street, I think so that is the last funnel which essentially is there out in collections. So I think the core focus is that firstly that funnel should be very limited, as in we should try to cure and do everything right by all the other modes, and only some specific filtered accounts should actually flow to that funnel where essentially a field intervention should be required. And that also, it should be treated as a reminder system versus a bullying system. I think that is also a very important thing. And here, like here, what we have seen is that collections, when it comes to collections, right, the traditional mindset is that it is somewhat of a bullying you are doing, you are sending someone to threaten, etc., etc. Versus the other way to look at it is as a reminder system. Even if I always miss my credit card payments, but when I get a message, I'm actually thankful that someone reminded me, because you have so many things going on in your life. Obviously, if you there's some nudge which happens that you need to pay, right, and you have the funds, so you'll do that. But having said that, I think obviously there are some categories and some segments which require constant nudging, and also there is a flow to the field. But when it comes to the field, I think firstly, after whatever the flow has been reduced, I think how we can improve the productivity of the people involved on field, for example, right? So one Kunal mentioned as an incentive structure. It's very, very important that essentially their incentives are aligned, but not at the cost of the harassing and to take out the money at any cost. So hence it is a very thin line. You have to navigate very carefully that how essentially you need to align the incentive structure, keeping in view that they'll not cross the line of harassment. So definitely incentive structure is one, but having said that, then I think I was chatting with Kunal, so he was mentioning the code of conduct, which essentially has been implemented recently, which is also very, very important, that just to figure out that while collecting, right, we are not just going too far and actually maintaining the decorum of our conversation, where we are being sympathetic and also trying to understand the situation and then trying to see if what is the best way out. So it's trying to figure out a mutual route to help close the loan, because you cannot just force anyone to pay. So on that particular aspect, I think there are two aspects from, I would say, from a borrower perspective, which are very important. But now when it comes to the agent, there are multiple things which can be done. Like there are multiple things, even in our, like we had an app. So what we did to improve the productivity, we launched some gamification, so that people essentially get to know how others are doing. And it's in India that works very well, right? If you get to know that you have to be at top, right, that leadership board will give you an incentive structure automatically, whether it's not aligned with even in the compensation. Just to maintain their ranking, they'll try to be the highest collector. So doing a lot of gamification and actually incentivizing them in compensation is one part. In at least that is a psychological compensation they get being at the top of the table. So that is another part which essentially actually works really well, and we have seen a lot of competition because of that. Secondly, like improving the productivity, there are multiple things, right? GPS route monitoring, which essentially enabled that you essentially have to follow these routes because this is the best way. You will be able to maximize your collections. So that is one part where essentially a lot of these optimizations can happen on how they're navigating, because they are clueless of there are 10 locations to visit, how to do that. And third is also bringing a lot of these industry level insights into them. So like at an industry level, right, we get a lot of insights onto what exactly is the collections going at a pin code level across the industry, not specific to any bank or a lender, but across the industry, how is that pin code performing? So that is also very important if that can be looped back to the collections team so that they can use that in the priority order. And at the end of the day, it is about prioritization. Everything is about prioritization, because the number of accounts in collections, it's so huge. You cannot individually cater to each and every account. So it's about where you want to put the money in, how you want to invest, and how you need to prioritize. Hence, the entire funnel from the digital to telecalling to field, and even in field, if we can create a priority basis, the tendency or the propensity to pay. I think that is the whole thesis which we will on.
So thank you, Kunal and Rishabh. I think we will close it now. So in summary, I think what all of us are mentioned is collections is one area where still there is a lot of traditional mindset. I think while COVID has improved the adoption of digital technologies in collections, but there's a long way to go. And I think over the next few years, I'm sure we will see a lot of traction of digital and other technology interventions on the collection side as well. Thank you so much for taking time off.
Thank you for
Definitely.
having me.
Thank you, Vipin. Thank you, everyone.
Thank you, sir. And may I request A. Ramesh Kumar, Chairman and MD, Laraksha Impact Finance Enterprise, to kindly climb up the stage and to felicitate Mr. Vipin V, Partner BCG India, who's been the moderator for this discussion. Please, sir. Can we all give a huge round of applause? Thank you. Moving ahead, to felicitate Mr. Rishabh Goyal, co-founder and CEO Credgenics. Following, Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited. Yeah. So, can I request everybody to kindly join for a group picture? Thank you. Thank you, everyone. Moving ahead, may I request Mr. Rajiv Kaul, Vice President, Sales and Business Development Control S, and Mr. Rajat Sharma, AVP Marketing Control S, to kindly present on the topic Control S Data Center Enabling Enterprises for Seamless IT Transformation. Please, sir.
Hello. Good afternoon, everybody. In fact, our distinguished guests have been so far talking about the digitization, the data, the importance of the data, and how that data is very important for all the companies, and where it has to be hosted is very important. So, in order to host the data in a very secured environment, in a very robust manner, that's where the data centers come into the picture. So what we are going to present here is about Control S, what Control S does, and how our data centers are playing a crucial role across the country in hosting many NBFCs, the banks, and the other major customers across the country. Now, going over the overall organization pattern, how it has grown actually. The company has started in 2008, and over a period of 14 years, it has grown up to the, with the data centers, we have almost now 8 data centers across the country, which are in line with the latest technologies, and we are competing with the likes of NTT Communications and the SCT technologies right now. So when we talk about our global footprint, we are present in 26 locations across the globe in different geographies. So in order to have a fully certified data center, it is very important that all the data centers are TIA 942 compliant. That's why they can become the rated 4 data centers. So all our data centers across the country are rated 4 compliant data centers, which are certified by the respective people. Most of our data centers are ISO certified with SOC 1, SOC 2 audit reports, PCI DSS, and all other certifications which are necessary for running the data centers. Recently, we have got the awards, CIA National Award for Excellent Energy Efficient Data Center Unit. The award was given by Mr. Venkaiah Naidu, and it was called the Golden Peacock Award. These are some of our customers who are basically on all the verticals. So we host most of the companies which are associated with us on all the verticals. You talk about the verticals, we have 2 of the top 5 media companies associated with us, 2 of the top 5 global car manufacturers associated with us, 2 of the top 5 pharma companies associated with us, 2 of the top 5 global financial services companies with us, and 12 of the top 25 banks are associated with us right now. Some of the banking customers which are associated with us, they are mentioned here, though we have NDA signed with specific banks whose names we cannot mention here, but some of them with whom we can mention, we are showing the names here. Now the company has very huge and big plans to grow and expand, and we are coming up with solar panel, solar plants everywhere actually, and specifically in Maharashtra, because Maharashtra is a big market for data centers. Most of the data centers you will find in Maharashtra itself. Now, to start with, we are coming up with a 125 megawatt solar plant in Maharashtra, which is already, the work is going on. And this project will be completed by 2023. This facility will equip to the 2 lakh megawatt of the power for the minimum of 25 years. The reason being that this is a very capex intensive business, and the solar power plants, basically the recovery on the cost is up to 20-25 years. So when we talk about our services portfolio, we have broadly divided our services portfolio into 3 segments. One is a major portfolio, which is co-location, which basically means hosting of data on the racks, and the racks are hosted in our data centers. So in that also there are different formats. We basically host the hyperscalers. When we talk about hyperscalers, all the AWS, Azure, Google, and GCP kind of customers, they come to us, they take huge spaces from us, and they build their infrastructure in our data centers. And they run their cloud environments from our data centers. That's why those infrastructures are also customized by us and given to them. No, you go to previous one. Previous one. Okay. So why Control S? Because Control S has very different, basically a lot of value propositions are there. All our data centers are having N+N power feeds. When we say N+N power feeds, the power to the data centers are coming from 2 different substations. One is the central grid and other is the national grid. So it is a connectivity which is happening right from the substations to the level of the racks, wherein we get provide the redundancies on the N+N power feeds. Apart from that, we have been maintaining an industry-best uptime SLA of 99.995% till date in the last 14 years. The best part about us is that we are giving the industry lowest PUE, which is 1.35. why this is very important is because PU is power utilization efficiency. When you are using the services of a data center, this factor is very important in arriving at the cost. And if you have a PUE very less, it basically reduces the cost of any customer up to 25 to 30%. Then all our data centers are green data centers. We try to optimize our power in terms of building more and more solar panels. And we try to use many sustainability methods to reduce the carbon footprint also. Then all our data centers are carrier neutral data centers, which means that we are having the connectivities from all the service providers, all the major service providers coming into our data centers, whether it is you talk about Airtel, Reliance, or Tata, or Vodafone, or Railtel, all of them are basically terminating in our data centers. We are a truly carrier data center, which means we are connected with NIXI, which is National Internet Exchange of India. And then we do the pairing with other service providers like TTML, TCR, Airtel, Reliance, and Vodafone. And we give the blended bandwidth to the customers. So when we talk about our data center footprint, we are majorly present in all these locations. In Mumbai, we have a DC1, which has a rack space capacity of 3,500 racks and a power provisioning of 224 megawatts. In Mumbai, we have another data center, which is DC2, which has a rack capacity of 2,000 and a power of 16 megawatts. This data center has has the entire building, which is solar paneled, which is catering to the internal IT load of our data centers. Then in Hyderabad, we have a DC1, which is rack space of 1,400 with a power of 10 megawatts. In Hyderabad, we have a DC2 in Gachibowli. It has a rack space of 650 and a power of 10 megawatts. In Noida, we have a rack space of 2,000 with a power of 12 megawatts. In Bangalore, we have a rack space capacity of 1,800 and a power of 12 megawatts. Now, our data center landscape has increased recently, and we have come up with the DC campuses in Mumbai. These are the extensions of DC campuses, wherein we are trying to build 5 DCs in one single campus itself. The total power of that campus will be 250 megawatts, which means it can run the entire Mumbai city in that small campus itself. So DC, leave it. Okay, now this Excel basically shows the DC footprint which we have right now across the country. If you see from 1 to 7, we have all these data centers are built by us and being managed by us. From 8 to 9, we have built and designed and built to suit for the organizations like NESEIL, ICICI Banks, ONGC, NIC. So the total footprint, if you see, we have 11 lakh square feet of the footprint right now in the entire country with 107 megawatts of power. And number of racks right now we have 1284. We are the first one who are starting with largest gas insulated substation. When we talk about the gas insulated substation, it uses SF6. SF6 is sulfur tetrafluoride, which is a gas which basically brings the efficiency in the power, and it utilizes a very small space to generate the power. So the advantages with Control S is that the main advantage is that we provide power usage efficiency. When we talk about power usage efficiency, as I earlier said, the guaranteed PUE is 1.7, whereas the design PUE is 1.35, whereas other service providers are providing the PUE of 2 or more than 2, which basically affects the cost of the services when it comes to data center, because power is the main factor in the data centers. So when we talk about the data center, this is how the security looks like to be in the data centers. There are multiple zones where the security comes into the picture. It starts with the fortified walls and remote controlled gates, and then badge scanners, handheld metal detectors. Then there are access controlled things, and then we have something called man trap. Man trap is basically a trap wherein a person who comes inside the server hall cannot move out unless that the back door closes. That's why it's called a man trap, so that the tailgating doesn't happen. Then we have biometric access, and then we have vehicle scanning systems also in place. So all our data centers are rated 4 infrastructure data centers. When we talk about rated 4 data centers, it means that we have n plus n redundancies on all the parameters in the data centers, be it the UPS, be it the generators, be it the you talk about transformers. Everywhere there will be a n plus n redundancy, which means even if there is a failure of one source at one point of time, the other will actively take part in that particular. It makes DC fully operational at any point of time. So n plus n on transformers, n plus n on DGs. Then we have diesel reservoirs which hold basically the fuel up to 48 hours, so that we can run the data centers in case of there is a power failure also. So these are some of the projects which are under construction and under execution. As I said earlier, we are coming up with DC parks in Mumbai. The DC park is very huge. It will have a power of 250 megawatts. It will cover almost 2 million square feet of space. We have a 220 kV GIS substation, which I was talking about earlier. There are 5 buildings of 50 megawatt each, which are coming in this DC park. So these are some of the sketches of the DCs which are already in construction in Mumbai, basically. So the DC campus will have a capacity of 14,000 racks, and the already existing setup is around 7,000 racks. The total capacity in future, in next few years, will be 21,000 racks in Mumbai alone. So we are coming up with a similar kind of setup in Hyderabad. We are trying to build up a DC park in Hyderabad. The lands have been identified. The capacity will be same, with almost 200 to 225 megawatts of power, and multiple DCs coming into Hyderabad also. Now Chennai, already the work has started. We are coming up with a rated 4 data center in Chennai, which will be 6 lakh square feet space with a 60 megawatts of power. Now, there is an interesting concept which we are now coming up with, which is edge data centers. What we mean by edge data centers is we are trying to build small data centers across the country at 500 different locations. They will come in different phases. So phase 1 will have 25, then phase 2 50, phase 3 75, and phase 4 150, and phase 5 will be 200 data centers. These will be small data centers with a capacity of 10 to 20 racks, which will cater to the local, basically local usage of the, which will reduce the latency, and which will help basically the local customers to have a easy access to their data. Now, apart from all these things, we provide private cloud services for some customers. Since banking is our forte, we have almost 75 plus customers in the banking sector. 75 plus banks are associated with us. And if you talk about national and international banks, they are mostly on our co-location pattern. And when we talk about mid-segment banks, you talk about FinCare or Credit Access, or you talk about Dhanlakshmi Bank, or mid-segments who are actually growing now over a period of time. They are on our private cloud. So private cloud is, as a practice, is basically run inside the system in our organization. And the reason being that the banks are coming on private clouds is also because it's more secured, it's dedicated for them, it's compliant as per the RBI guidelines also. And we provide infrastructure as a service on network, security, compute, storage, and backup services also. In banking community, on cloud, on private cloud, basically, we are trusted by 25 plus banks on our private cloud. The total number of banks which are associated with us are right now 75 plus banks, out of which 25 are on our private cloud. We helped banks basically to create this 50 million accounts which have been created by Janadhan Bank accounts. Those we have hosted with us in our data centers. That's it. Thank you.
Well, thank you so much, sir. And may I request Mr. G. Subramaniam, Executive Director, Chief Risk and Operations, Aptus Value Housing Finance India Limited, to kindly climb up the stage and felicitate Mr. Rajiv Kaul, Vice President, Sales and Business Development Control S, Mr. Rajat Sharma, AVP Marketing Control S, and Mr. Anand Vijayaraghavan, Senior Manager, Sales Control S. With a memento as token of gratitude and respect. Sir, I also request you all to kindly join for a picture. I request you all to kindly join for a picture. Can we all give a huge round of applause, please? Thank you so much. Thank you, everybody. Moving ahead. The biggest challenge for debt collection has always been and will always be to start a dialogue with delinquent customer. The future of collection is dynamic, agile, and constantly evolving, driven by AI and ML that enable micro decision making. So moving on to discuss the topic, innovating delinquency management, best practices, challenges, and the way forward. Delinquency prevention and management has been one of the most key critical areas of work in the lending life cycle. In today's digital-led era of lending, there has been a significant shift in business models led by NBFCs and fintechs, which is changing the overall dimension of the industry, including delinquency management. While the use of technology backed up by demand has led to a significant opportunity for growth for all, but at the same time, the industry is also challenged with issues of data privacy, regulatory changes, and significant changes in customer expectations. All of this play a significant impact on delinquency management. In light of the above opportunities and challenges, we would like to understand the role technology is expected to play in the prevention and management of delinquencies. To discuss the same, may I request Mr. Bhavin Parekh from SPOCTO. Can I request Mr. Bhavin Parekh from SPOCTO? Yes, sir. Can we all give a huge round of applause, please? So talking about SPOCTO, SPOCTO is an AL and ML company focused on delinquency prevention and management. SPOCTO currently serves 30 plus banks, NBFC and fintechs and processes more than 4 million accounts per month. SPOCTO has its presence across India and the Middle East and is set to open its operations in the US. So we have our moderator, Mr. Bhavin Parekh, co-founder and chief business officer, SPOCTO Solutions Private Limited. And to talk about him, so Mr. Bhavin Parekh, who has almost served 2 decades of collection industry experience. He's been instrumental in conceptualizing and implementing the concept of digital collections. He has been driven its adoption since inception and scaled it to processing 4 million transactions a month with an AUM of approximately $3 billion. Can we all give a huge round of applause to this, everybody? Bhavin led and pioneered implementation with 30 plus BFSI clients in India and Middle East and is driving the same in multiple international geographies with the agenda of Made in India, delivered to the world. And to continue with the topic, may I request the other panelists to kindly climb up the stage. May I request Mr. Parthasati Ralabandi, Chief Risk Officer, Northern Arc Capital. Please, sir. May I request Mr. Sarvanakumar Krishnamurthy, SVP, Network and Cybersecurity Technology Engineering, Yes Bank. May I request G. Subramaniam, Executive Director, Chief Risk and Operations, Aptus Value Housing Finance India Limited. May I also request Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited. Also, may I request Dr. Harish Ramani, Practice Head, New Cybersecurity Operations, 3i Infotech. And handing over to the moderator, Mr. Bhavin Parekh.
Thank you so much. Thank you so much for the build-up. Thank you, everyone. It's indeed a pleasure to be in a room filled with so many intelligent minds. While I know that we are holding you between the lunch, and we'll try to do justice to ensure that the time that we consume is worth it. And I've also been told by the organizers to ensure that I try to keep it as crisp as possible. While that's a difficult task, but I'll try my best. Thank you so much. While the first half of the day, I think we have spent enough in terms of understanding the challenges that we see in the NBFC and the fintech era. And besides, we have learned a great bit about how the industry is shaping up on the onboarding side of the business and the underwriting. We have seen elements of understanding the cybersecurity. We have seen about the data hosting and the other elements. While it logically builds up for the last leg of the lending life cycle, which is largely about getting the money back. We have spoken enough in the day to ensuring that how the money goes to the end customer, but at the same time, it would be equally important for us to focus upon how do we need to get it back, because that's the crux of the entire balance sheet. And to discuss that, I do have a great panel who come with great amount of experience in that. In the interest of time, again, I would probably try to put question to an individual, but I would be more than happy for more individuals to contribute to the views. So with that, I was having a chat with Subramaniam sir, just backstage, and he had very interesting views about how things are shaping up, especially in context of the entire delinquency prevention and control. And I would want to start the session with getting his views about what he was explaining to me about how the payment ecosystem, the digital payment ecosystem in the country is helping the entire lending ecosystem get the money back. And he had some interesting views of the changes that he has seen in the current era. So, sir, if you can help us with some thoughts on that.
Yeah. See, that's what I was explaining before to Parekh, to Bhavin, about what is changing in retail finance collections is previously it used to be 100% cash. Now we see a lot of digital payments. Predominantly we see in Google Pay, in Phone Pay. The Google Pay dominates the scene in the market. And if you go to even a small vendor, you see that guy has a Google Pay, and from there he collects. So since the revenue is coming from this kind of digital method, he is able to make his payment through digital. Suppose he does everything from cash, then obviously he will make the repayment by cash. So that is the biggest change we are seeing in the last 25 years, that this GPay dominates the market. And even in a very rural market, a small vendor is using GPay to the core. That is one thing. Second thing, on the point which you are asking about the collection agents. It is actually a very tricky question, because I found it most difficult to find an answer to that collection agent issue, because the aim of financier is to get the money back. Okay, honestly saying, that is the aim of any financier, be it bank or whatever it is. Now the question is, there are three collection agents. In my view, is that one is the bankers, where we deposit our NACH and we collect the money. There we need to be very careful, when we send the details to the bank, it has been an encrypted form, so that I'm not worried about the bank side, but on the way, the data should not get misused. When we are sending the data and when we are getting back the bounces, on the way, somebody should not hack it and take the data. So the encrypted version, as you give the data to the banker, is very important. Next thing is on the digital front, we see a lot of improvements happening in the advanced calling. We can actually avoid people and we do mechanization of advanced calling so that the data loss can be completely eradicated. Then, of course, after the instrument is bounced, the first bucket, the X bucket, that can also be done through digital collections. You can send a SMS or anything to the customer can pay that. My view, till this time, be it advanced calling and be it X bucket, the digital success will be very high. But having come more than that, if the customer goes to 2 bucket and 3 bucket and goes to hard bucket, my feel is digital may not really work in a large extent for collecting the money. And when it goes to the next step like script tracing, or when it goes for a legal recovery, ideally we give only data like telephone number and address to the collection agents, be it in-house or out-house. We don't give data like Aadhaar, PAN number and things like that. But when he goes more than 3 dues, when he goes for a skip, then of course we need to give the entire application, entire file, including the PAN data, other data, his references, his relatives, and most of the details to first skip trace him, then collect the money back. Even in the legal recovery, all these details are required because we need to see what is his other movable assets, other immovable assets, and who are the earning members and other family, or can we go against garnishee of some of his creditors and things like that. So when you have this skip tracing and also the legal recovery, we require a complete data from the customer file. So that data we need to share with collection agents or recovery agents to get our money booked. So to that extent of skip tracing and legal recovery, I am very skeptical of anything happening. So to that extent, if there is a data loss, yes, there will be a data loss. Thanks, Bhavin.
Just to add to that one point,
Yeah, Kunal.
sir made, there is also a shift coming in terms of the people carrying cash with them.
Right.
With digital payment banks coming in, who have tied up with the last mile, like where a customer or a person can walk into a kirana store and he can deposit the money over there. So what it has done, it is enabled this certain amount of cash component to even come through the digital way through that route also. So even that has become a big enabler in the industry. And we as lenders, like what sir said, the primary job is to collect efficiently. So that mode is also during this COVID period has enabled us to bring down the cash component part of it, because handling cash is a big risk in itself. So I just wanted to add that piece.
Absolutely, absolutely. In fact, on those lines only, I picked up something interesting from your previous session, and I wanted to direct a question to you in that regards. You talked about phygital, and that being the next thing that you guys are probably trying to drive. So, especially in context of the delinquency management and the entire prevention and control, from the industry perspective, what are the elements? And as sir also rightly mentioned, in collections, it's not never going to be 100% digital ever, and all of us understand that. But at the same time, when you talk about phygital, what are your thought perspective? How do you think phygital with the FOS, the technology, and the lender coming together is going to change the entire way the collections is getting done? And what are your expectations in terms of the AI ML companies and service providers like us helping you out and the problems that you would intend to solve?
See, first and foremost, in the scheme of things, let's understand it's about cracking the code of giving the right kind of allocation. Whom to allocate what?
Right.
That is the biggest challenge in itself.
Absolutely.
You get a 90 plus confidence level in that, you're anyways home. Because your cost of collection then gets considerably come down.
Right.
So that's point number one. And I'm also leaving you with a food for thought for that.
Right. Right.
Point number two is, now that you've cracked, assuming this allocation methodology of whom to give soft collection, whom to give the mid-level buckets, and whom to give the hard buckets. After that, connecting those people to the customer, whether through SMS, whether through chatbots, or what technology has to be used for connection, is the second piece of it.
Right.
Then the third piece comes to the those buckets which are either skip tracing buckets or legal settlement buckets. There again, enabling those customers or those particular enabling the financiers to crack down on those customers through digital way.
Right.
Like in the legal settlement, why to actually send a physical paper to the customer when it comes to a legal notice? We can send it over a WhatsApp or as an attachment or some other way as well.
Right.
So these are 3 or 4 avenues in each and every bucket that we typically tend to see from a usage perspective.
Wonderful, wonderful. So when we talk about digital coming in a lot of stages, including say going to the feet on street, going to the notices and all of that, we're talking about a lot of data. So from that perspective, I would want to get the view from you, Mr. Savana Kumar, of how do you see, the entire information security, and we also briefly spoke about that, right? And you had some very progressive views. We would want you to enlighten the crowd and the audience with that. But besides that, I had a very targeted and pointed thing that I also wanted your views upon. When we talk about the entire collection management, delinquency management process, there is a lot amount of data which is doing up and down between multiple different digital vendors. There is a lot that is going through, right from the last mile feet on street to the telecall center agencies, which are largely outsourced, even including in-house feet on street, and then there are various other models. When there is this quantum of data of the borrower leaving bank's premises and then coming back, there are a good amount of information security controls that as a bank and lenders you would be concerned about. So what do you think is going to be the future, especially in this data sharing model, and how do you feel that the banks and the lenders can be ring fenced, especially when so much of quantum of data is doing up and down?
Yeah, first of all, thanks for the brief question. So the whole day we talking on more on the lending and the collections and the payment. So maybe some of them we are going to talk in a hot topic, which is we are going to save the data. So what is the data you guys are collecting or cooking? So how we are going to save the data? So that is one of the main challenges in a security perspective. So the threat is around everywhere. So I can cater in a two-way. One is more on a technology wise. So we have to be battle up because the attackers and everything happening, they are smartest. So we cannot call, we should also smart. We should be more on a lethal. Then only we can able to combat them. So what are all the business is bringing and what is the volume of business happening, the bank transactions? At the end of the day, it's all a data. Data is a new oil. So how we are going to save and secure that? So there is enormous data exfiltration is happening. So what is the policies which we are going to make into that? So that's the reason. So there is a two aspects. Technology-wise, we can deploy all the DDoS attacks happening, what is at the perimeter, at the gateway level. So we are seeing different types of traffics coming up from the geo protection level.
Right.
So we need to restrict those areas. So where is your business wall? So today we talk everything in a cloud base. So that's the reason RBI made a very strict guideline. So all the data's processing, everything should be within the India.
Right.
So this is whoever doing the business model through completely with the financial, they have to adapt the RBI guidelines. So that is one of the key factor RBI coming into the picture is to restrict the data should not be processed outside the India. And we also have to be technology wise as we adopting the cloud model. So the cloud solution providers, the complete cloud, we say the cloud pops. So
Right.
that should be within the India region, even though the big player like an AWS and Azure,
Right.
we give the business to them, we give the complete data, completely hosting with them within the India region. That is what the RBI guideline says. So we should start thinking in that way to save how we are data, because as we arrived as one of the largest data processing in the whole world as India. So
Right.
today, so we are going to be more than 1 trillion and data is processing in a day. So what we have to do is we have to be secure the data wherever we are starting from the point. So that's the reason we started with the authentication mechanism, two-factor authentication, and we have started with an biometric base. So most of the business model which we talk about there, so
Right.
the people start, what I oversee in the next future, so more on a facial-based authentications where the fraudulent kind of an access can be reduced at least,
Right.
so that we will able to help the business to grow in that way. So that is one of the key point I like to address. And other side, the process and the policies, where the information security always is a roadblock for the business. So
Right.
that is the way it's taken up every time, right?
Right.
So it's not, we should be bifurcated both the things. So the information security should understand the business requirement, and then based on that, they have to be deploy the policies. So starting from the vendor who is initiating the business with them, we should have the clear third-party vendor policies, process management. From day zero, we should clear with them, so that the information security should not come at the final moment of approval process or a give a go ahead or only during an audit time. So
Right.
rather than that, they have to be part of the complete application itself. So
Right.
from the discussion phase, from the BRD level, from the what is the product hunting they are doing it, and the testing level. So everything they should be part of that. Then they will have the role to play. So
Right.
that is what I like to highlight here.
Wonderful, great. And Mr. Harish, I think that's also one of your favorite areas. So we would like to get your views on the same thing.
Good afternoon. Again, see, information security, where you see it from the lending or the operational side, is one definite thing. But more importantly, as Saran sir said, about process, policies, procedures, standards. So you just have to incorporate a little bit more on top of it, where how the processes are being defined, what kind of products are being used, and how these products are entrusted with people. Today, RBI has come out with a guideline saying all the data is supposed to be in, if it is in a cloud, it has supposed to be in Indian geographical region. And then you need to have that entire maintenance operations, everything incorporated with it. And we're talking about RuPay kind of things coming in, and incorporation is also happening along with PCI-DSS, with like simultaneously with PCI-DSS and RuPay. So if you really ask it, I'll define it from core technology standpoint. Say, we said network security, application security, API security, cloud security, security operations. So all of these things comes pretty much under the operations security, cybersecurity operations. So we keep calling that cyber ops, right? And definition of that is all along how you wanted to handle it, whether it's going to be from the perimeter level, or it is going to be where your data is going to be connected between your internal perimeter and external, where your customers are getting connected. So you see voice-based AI coming in. You see machine learning is playing a very important role, where it reads emails, it can respond to you by voice within 30 seconds time. So we have amazing products coming up. How effectively is the API security coming in? Since the morning, I've been listening to people talking about API applications. So how effectively are we making a contact with respect to these APIs? And what kind of security parameters are we really incorporating with respect to it? Again, yes, one more point very clearly mentioned by Saran sir is it should not be a roadblock. Security should not be a roadblock, right? But people are actually seeing it as a roadblock because it is not required at the first instance. When there is a problem, then everybody is pinpointing on the security parameter and saying data loss is happening because security is not being taken care of, not well taken care of, rather in that way. And how do you really segregate that? Is only by started to provide operations from the start, started to follow the compliance aspects along with the standards and procedures which are relevant to our land, law of the land, more importantly. So we're talking about NBFCs, which is more importantly from the law of the land. So we're also advising in other segment from the credit unions of the US or from the financial sectors of the Europe market. So they have their own laws of the lands. But what we are typically doing with information security is we are trying to tie up with the laws of the lands with India, but operating procedures are all being from the Western markets. So this is where the break is, and trying to see the operations with respect to commercialization. So you say X as a factor of cost, where I'm not able to get my money back. The collection has been a painful process. And Subramaniam sir said it's not going to be fully digital. Completely agree with you. Agree with anybody for that matter. I'm not from that background, brother. But it is being seen. I'm also, on the other side, a customer, lended loan, repaying loan. One loan, if I miss, I know what kind of problems that's taking place. how it is really creating a problem with API, because what I'm trying to communicate is not being happening on the other side of the story. But how is my data being protected, right? That's really a sorrow part. Over and above, we keep talking about it number of times. And most importantly, I see the bottom line where we start having a 7-stack process, starting with policies, procedures at the bottom, along with awareness and training. How effectively are we imparting training to those people? Because we're talking from the top line, where we're trying to protect the red corner, where it's the data, right? And we try to protect application, we are bringing in MFAs and all these technological advancements. But at the bottom line, it still continued to be on standards and protocols with awareness and, of course, training on core. See, why am I emphasizing training is, I've been trying to do some training for quite some time, well, about a decade now, working with IIT Madras and IIIT Bangalore kind of institutions. We've continued to have the same problem. When I started with about 2000 and maybe in 10, 11, and we're talking about 11, 21, 22, pre-COVID, post-COVID, that problem is still continued to be the same in one side. On the other, it's all the cyber ops. We're talking about commercialization. Are we really looking for Indian commercialization or looking at the westernized commercialization? That's where we have to differentiate and want to probably bring in effective manners into it. That's what my summation would be.
Thank you. Thank you. That was indeed insightful. And one thing I noticed the moment you said that IT does not have to be a roadblock, Mr. Pathasati had a big nod of the head. So I just wanted to know your perspective, sir. How do you think that IT, should play a more contributory, positive role, unlike what people usually perceive of them being the roadblock? And what are your views, especially in context of the lending life cycle and especially on collections?
Right. Yeah, absolutely. The data or sharing of data is something which is absolutely critical. And while that is so, and that is obviously how you collect.
Right.
While that is so, respect for the customer is something which is also important.
Right.
And the balance of that is what one tries to achieve. And when somebody is doing that, if it is seen as being a roadblock, then obviously it's a little bit of short-sightedness. In the long term, if you actually want to be able to collect,
Right.
and if you don't respect, that is when you actually get into problems, and that is actually why
Yeah.
I was basically nodding, or I was agreeing with him so
Yeah.
much, because seeing these information technology rules or privacy laws as a hindrance, as a roadblock, is really short-sightedness.
Right. So besides that, sir, in the post-COVID world, I think all of us spoke about how things have changed significantly for all the industry, especially for the entire debt management, the receivable management. There have been great progress that has happened, and some of them, sir, rightly highlighted. What are your views? How have you seen the market from both outside in and inside out, in terms of things which have seen some gradual changes? There are things which have seen some paradigm shifts. What are your views on this, and how do you see this, sir?
Right. Obviously, collections is a difficult business, right? I mean, all of us know that collections is a difficult business. Some of us who have actually been in the field and tried to do that would appreciate it even a lot more. A lot about collections, I think, has already been spoken by some of us, either in this panel or other panels. One area that, I mean, it's not, and COVID has nothing to do with it. It started even before that. One area on which actually I specifically wanted to speak about is collections in a co-lending sort of a situation, right? Co-lending is something which has gone up quite a bit in the last few years. And the way at least I look at it, it's going to be much bigger in future, right? What is a hard business, which is collections, becomes a lot more harder in the co-lending situation, right? And that is basically because of two reasons. In a co-lending situation, number one, there is an originator and there is actually a balance sheet lender. And the originator is not just originating, it is most of the time, the services that are offered are origination, servicing, collections, and in a few cases, there are even FLDGs and these sort of things, right?
Right.
So for the collections piece, the originator is actually already being paid a service fee. Right. So to set up a parallel collection structure at the lender side is actually duplication of cost, which will make it unviable.
Right.
So that is one big constraint that you face in that scenario. And the second, of course, is while the way the physical files used to come up for approval, and while in that structure you will probably get similar amount of data between originator and the lender. Right? In the current situation where most of the lending actually happens, or at least in terms of number of loans, if not in terms of volume, when it happens through, let's say, an app-based lending, and most of the data is actually not coming in terms of file, it actually comes on a software, in a LOS, API integrated LOS to you, etc., etc.
Right.
What happens is, while a lot of things like a KYC doc and these sort of things, while it is shared, a lot of data that is collected by the app is not really shared by the originator to the lender.
Right.
So the amount of data that is available with the originator is significantly better than what is there with the lender. Right? So one is you don't have a parallel structure for collection. And second is the data that you have is probably inferior to what the originator has.
Right.
And you as a lender get into collections only when you are not satisfied with the performance of the originator's collection.
Right.
Right? And that is when you start, and you don't have the structure and you don't have the data, how you actually can do better by taking over that portfolio and trying to collect. That's the conundrum a lot of us would face. I mean, already started facing, but will face a lot more in this scenario. Now, what is the way out? It actually comes down to strategy, because you obviously can't build up a parallel structure and keep it idle for a originator to fail, right? So it actually comes down to collection strategy. You actually develop a strategy to face this sort of a situation. And obviously, for entities like, I mean, a few of us are here, right? Obviously, you are one, Spocto is one, CreditGenix is one. A lot of these services are offered by these sort of companies,
Right.
Is what you actually integrate into that strategy, such that you don't have this 9 months, 1 year sort of a lead time to set up a collection framework. Right?
Right.
All this is actually figured in, and the partners who will actually come in that stage is already identified. Some amount of connect you already make, and that is actually how you try to manage. Now, in a few cases, obviously, even before it comes to the situation where you have to collect on behalf of the originator, you try to test it, right? And be ready to face that situation, which will actually help you in minimizing the cost with a strategy which is quick to get to its feet.
Right.
At a very broad level, it is not just about co-lending. Actually, if you are a lender to NBFCs who are on lending to retail, basically NBFCs which are on lending,
Right.
that's a risk that you actually run, right? I mean, if there is a stress situation even at a institutional lending level, one of the ways you try to solve that is actually by trying to take over some of the retail portfolio.
Right.
So it's not, while all this I have explained in terms of co-lending, this is something which is required even if you are an institutional lender into the NBFC space.
Right.
That is broadly how I see things evolving. Good space for a lot of people. You, CreditGenix, and a few other companies I've seen here.
Right, sir.
It's a good space to be in.
Good, good. So you brought up a very interesting topic of co-lending. Yeah, sir, before that, yeah.
See, we talked about delinquency management and AI and ML.
Right, sir.
My feel is that more than this, particularly we should use more AI and ML when we do the funding part of it.
Right.
See, we should do the analysis of our data to find out what to fund and what not to fund.
Right.
Because there is no general fit, because one company's profile will be generally different than the other company. So you can't have one general fit.
Right.
Okay, I know of one company in Chennai who does politicians and they are able to recover the money well.
Wow.
Whereas we generally put the politicians under negative list.
Must be run by a politician.
Your data is very important, and that is why the AI and ML should really work
Right.
to get you. Because my feeling is that if you don't do a good underwriting,
Right.
no amount of Jambuan is going to collect the money.
Right, absolutely. Yeah, thank you. Interestingly, we at Spocto, we have already built in a score which is only delinquency prediction. And, while current delinquency models are largely based on the demographic information that you capture and try to make sense out of the financials of the customer. But there is a great bit that you need to understand from the past book and see which kinds are defaulting. And, there is a behavior-based score that we have, interestingly brought in. More than happy to have a a separate chart on that. But while you've brought in the co-lending topic, Kunal, we just wanted your views in terms of how do you see the entire co-lending piece shaping up the risk for the lender. And as he rightly mentioned, the originator would be for a certain part of it, but the risk stays in onto the balance sheet. How do you see that is shaping up in future, because it is fairly fresh as compared to the traditional methods of lending? And what is your take on that?
I think I definitely agree with what I heard from my co-panelist. The thing is, when it comes to co-lending, you are actually kind of using two sets of brains to solve a single problem.
Right.
Let's put it in this way,
Right.
You may feel that you have got a crack of this particular portfolio, but like we started, it's not ever going to be a situation where you've got a crack of a particular problem. And here the problem is whom to lend.
Right.
Because if you've got the crack, then delinquencies will never exist. And if delinquencies will never exist, trust you me, this job of being in NBFC lending will be very, very boring.
Okay.
I feel collection is a far more interesting job than lending or doing the underwriting.
Right.
Because that's where you learn what is actually happening. Because like it said, it is easier to lend, and
but
it's
to
difficult to collect.
Absolutely.
That is the reason it has been said so.
Right.
So when it comes to the co-lending model, what we heard him saying, it is at the end of the day, two people who are lending to the same borrower jointly. So when we define the policy, it's actually two people defining the policy together. So even if you have a learning of a senior lending partner, it's not always that the senior lending partner brings everything to the table.
Right.
You also learn from the new age fintech partners who are there, who will bring some or the other ways of connecting to the customer or underwriting the customer, or analyzing the behavioral part of the customer, because it's just picking the brains.
Right.
So that's where I feel the ball is definitely going to be changing, and we are definitely going to see an exciting time. Co-lending is a new way of lending, and we are all, as some of the lending partners, happy and excited to be either a co-lending partner or a co-lending company as well, who wants to lend as well. So because we have both kinds of models, where
Right.
we lend along with certain fintech companies,
Right.
and we also partner where we are the lenders, and then
Originators, yeah.
there is a senior partner who will basically be supporting us at the back end.
Right.
So it's going to be exciting time from that perspective, where two sets of brains resolve one problem.
Wonderful, wonderful. That's great. And I like the kind of passion that all the NBFCs they bring when they talk about collections, because most of the time I keep on hearing from almost all the lenders, especially on the NBFC side. They say we are not in the lending business, we are in collection business, and all of that clearly comes out of the way right from Subramanian himself to Kunal, how you guys speak about the nitty-gritties of collections. That brings me to a little gray side of the entire execution of collections. There are constantly incidents which are not great, with the data getting leaked and not getting used very well. So with you, sir, I just wanted to understand, so what is your view that in this time and environment, when things are becoming so transparent, and your consumer data is at stake, and it is getting misused at times, how do you think that can be prevented better by all the lenders, including banks, NBFCs, and others? And what are the expectations that you would have from the new age technologies who should come and help you guard this better?
As I told you before, on the question of advanced telecalling and predictive check bounces, digital technology will really help. There are so many institutions providing so kind of softwares. Without intervention, we can do that. So data leak will not be there.
Right.
The same way in the X bucket collections, it is possible.
Right.
But when it comes to hard bucket, when it comes to skip tracing, when it comes to legal recovery,
right,
still today we have not found a method of cracking that, or I have not found a vendor who can do that.
Right.
Predominantly because customer is also at a different level. We have to persuade. In fact, we have to force the customer to part with the money. So to that extent, I think we will continue in the same way what we are doing now.
Right. So that makes it very clear. Yeah, Mr. Sapata. Yeah.
So I can just add a bit. Yeah.
Yeah.
Yeah, absolutely true, sir. The obviously the higher bucket collection, the harder bucket collection is obviously going to be difficult. But where it really helps is to arrest the flow into those buckets, right?
Right.
A large part of AI and ML help in this space would come in terms of predictive of analysis of collections. I mean, before the first check bounce or before the first, in fact, even before the first EMI payment,
Right.
our ability to assess as to which are the customers who are likely to default,
Right.
and then put in the effort before the bounce actually happens.
Right.
More proactive calling at that point of time. Who should we call? Who should not? Obviously, every call has a cost,
Right.
So who should we call? Who we should not call?
Right.
That is actually where a large part of the value addition in from the ML techniques are. I mean, basically AI use is going to be. The harder buckets the loan gets into, possibly the more physical, more harder manual part of the collections probably come in. Just to reiterate what
Yeah.
sir is saying.
So, and that's the problem that I think, as an industry, we are trying to solve. Yeah.
Yeah, to add to that, just let's understand, when he's continuously talking about soft bucket versus hard bucket.
Correct.
The challenge is also to maintain the similar code of conduct, because, you're outsourcing the entire piece through a
Absolutely.
third party or maybe through an in-house solution.
Right.
So when it comes to hard bucket, things will be more firm,
Right.
right? But how do you maintain a similar level of code of conduct?
Right.
Because at the end of the day, you have to treat the customer in a, very, very, how do I say, in a very, very normal manner when it comes to, and, be empathetic to him as well.
Absolutely.
But, you also have to explain him the downside of it, that, his bureau scores will go down, and, the other side of it as well. But be within the circumference of the code of conduct. So when it comes to the hard bucket and soft bucket, that is also a big differentiation that one has to play.
Absolutely.
And when we do that, that is the primary cause of differentiation. When we have to segregate a partner, how do you maintain as a partner, the level of
Decorum.
decorum when it comes to adhering to the code of conduct.
Right. And with RBI's own DRI guidelines, around the same, I think, which are not, stringently enforced on the NBFCs, but I'm sure all the, most of them do adhere to that. And what I'm hearing from the panel as a consensus is largely in the early stages, you feel that automation can definitely try to solve it independently and probably keep the data within and try to make more resolution out of it. But besides that, in late stages, you would want technology to enable that, but the physical component is always going to be there. It's going to be the phygital model, as you rightly mentioned. And in that, I think the need of the hour is to ensure that the person on ground is more compliant. So I think if technology can help there, besides solving the early stages, helping make it more compliant in the late stages, is what I guess the requirement is coming out.
We also saw in skip tracing some of the technologies being used.
Right, sir.
Like they are able to track down on the Facebook, the Instagram,
Right.
and Naukri.com and various job sites.
Right.
And we have also seen cases where we have traced guys using matrimonial sites.
Wow.
Okay, and there are tech people working on that. Unfortunate to say that there are a lot of people who have come from UAE after taking loan and come to India.
Right.
So these banks have appointed people to search these people in India to take back the money to UAE.
Right. So interestingly, we serve many customers in UAE, and that's one of the problem that we have been trying to solve. We have not gone to the extent of Shadi.com, but I think that's an interesting idea. My team should make a note of it. But I think that's really interesting. So that brings me to the next question that I wanted to understand. In the current age of the mobile revolution, the jam that we spoke about in morning, everybody currently is contactable on some of the other numbers, right? So there is no delinquent which is currently not having a mobile number outside to connect with. But the problem that lenders do face is the mobile number or the contact points that they have might not be the updated one. And again, that remains an area of concern always, the entire contactability issue as the stage progresses. There are some innovative solutions that I've heard from them. But what do you think, should be and help probably from some regulators wherein probably an access to the mobile number through Try or somebody else, probably what are the kind of things that you expect from the central bodies? If I can get the view of the panel, that probably would help solve you. Besides you only trying to look up for the data, there is this entire account aggregation thing coming into place, wherein you might get a visibility down the line. Currently it's for bank, NBFCs may also come in play. But I just would want to understand the view of this panel in this context of what are your asks from the regulators, or the things that you would want to have better access to the newer updated information of the customer. Yeah.
So one of the main pain area, like everybody is talking on the collections and lending. So what I could see on the security per se, or information security per se. So the consolidation is one of the key factor, which is they not able to achieve it, where the other business model in the same fintech they started. So consolidating the data is one of the key thing. So for that, the automation is play a very major role into that one. So how we have to do that consolidation, because it's more on the track and trace mechanism. So it's more where the manual effort will be there into that one.
Right.
So the main consolidation should start from putting all the data into the centralized storage. So the data centralized right now, it is not happening more on the lending.
Right.
So it is happening at the local breakouts level, and those data should come to the central link. It takes a lot of durations, and from there itself the data mismatches and the track and trace is getting lost continually. So that is one point I like to highlight. So when we have the more data consolidation happening at the central one storage level, so where we can bring the visibility part, so that able to help the track and trace mechanism better. So that helps the business also.
Right. So you're talking about more of collaboration, and collaboration probably in morning also we heard from many now open architectures is probably the way forward. Unless people collaborate, I don't think it would be of a great advantage to their businesses. So I think collaboration is one of the things that probably is the future. And I think as IT guys, you guys might have otherwise view on collaboration, but good to hear IT guy talk about data getting collaborated with multiple different partners. I think I had many more, but I think we are almost, yeah.
One small point to add to what he was saying. There is actually a line up to which you would not want to cross in terms of skip tracing, right?
Right.
And, I mean, while you would want to try the mobile number or the Facebook, etc., you don't want to get into the relatives, tracing them and all that,
Right.
When it is left to individual agencies, individual NBFCs to do that,
Right.
or individual collection companies to do that, probably that's a line that, I mean, one of the regulatory concerns would be that the line would be crossed on and off.
Correct.
Possibly one central organization, I mean, like you have any of these organizations, right? They're like a bureaus or like the
Correct.
CERSI that we have. If there is some sort of an organization which actually can take this as a service in
Right.
terms of consolidating all the collection
Wonderful.
on the contacts information,
Right.
that's probably something that actually can work as a solution for the industry.
Wonderful, wonderful. That's really helpful. So I think we have got great views, and as we understood what are the expectations that the NBFCs and you guys have from the new age technology, and we have got a great direction in terms of the things that you guys are trying to do, and that also I'm sure would give great amount of insights to the audience. Besides that, there are some personal takeaways, including Shadi.com for me. Yeah, so I think, but it was great interacting with all of you. Thank you so much. Thank you.
Well, thank you to all the panelists and thank you, moderator. And to begin with, may I request Dr. Ravi Gupta to kindly climb up the stage and to join our moderator, Bhavin Parekh, in felicitating the other panelists. And to start with, may I request Parthasarathi Ralabandi, Chief Risk Officer, Northern R Capital, to kindly come forward. And may we have a memento as a token of love and gratitude? Please. Can we have a huge round of applause, everybody present here? Moving on, may I request Mr. Sarvana Kumar Krishnamurthy, SVP Network and Cybersecurity Technology, Engineering, Yes Bank, to kindly come forward. Followed by this, may I request G. Subramaniam, Executive Director, Chief Risk and Operations, Aptus Value Housing Finance India Limited, to kindly come forward, please, sir. Moving on to next, may I request Kunal Khatpal, Chief Risk Officer, Hinduja Leyland Finance Limited, to kindly come forward. May I now request Mr. Ajit Kumar, Chief Operating Officer, Credit B, to kindly climb up the stage and to felicitate Mr. Bhavin Parekh, Co-founder and Chief Business Officer, Spocto Solutions Private Limited. Please, sir. Can we have a huge round of applause? Following that, may I request Dr. Harish Ramani, Practice Head, New Cybersecurity Operations, 3i Infotech, to kindly come forward. Please, sir. Audience, some energy. Let's give a huge round of applause. Thank you. And may I request all the panelists, moderator, Dr. Ravi sir, to kindly come forward and join for a picture. Sir, hold back. Also, I would request you to join for a picture with the Bank and Finance Post magazine as well. So here it goes. Once again, a huge round of applause to the entire team of panelists and the moderator along with Dr. Ravi Gupta sir on stage. Thank you. Thank you everybody once again. So to the ladies and gentlemen present here, we are breaking for lunch, and it would be a kind request to all of you to be back inside the banquet hall in next 30 minutes. So expecting you all to see in next 30 minutes in the banquet hall. Thank you.
भारत एक युवा देश है विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साफ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बाद के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साफ, मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। युवा देश है। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साफ मैं हमेशा कहता आया हूं, IT plus IT is equal to IT. Information technology plus Indian talent is equal to India tomorrow. विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। युवा देश है। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो। अपने युवाओं की IT एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बात के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ में हमेशा कहता है, IT plus IT is equal to IT. Information technology plus Indian talent is equal to India tomorrow. भारत एक युवा देश है। विश्व में हमने युवाओं की आईटी एनर्जी के माध्यम से अपना एक रुतबा खड़ा किया है और भारत इसके बाद के लिए गर्व कर सकता है। दुनिया में हम आंख में आंख मिला करके बात कर सकते हैं। और ये मेरा साथ मैं हमेशा कहता आया हूं, आईटी प्लस आईटी इज इक्वल टू आईटी। इंफॉर्मेशन टेक्नोलॉजी प्लस इंडियन टैलेंट इज इक्वल टू इंडिया टुमारो।
Now raise up and answer if you know which place is that. On the whole, you just have to guess the place. And this is the first place on screen. Yes, let's go ahead. Simplest of all. And would be great if anybody can share their experience if you have been earlier here to this place. Yes, I can see someone raising there over the mic.
It's a great experience to see a structure like this, which is just leaning on, and it's a architecture marvel, and we really enjoyed the surroundings as well as the place itself when we were on a Europe tour. Thank you.
Perfect. The guess was right and his experience was also cheerful. Moving on to next, let's see what's next on the screen and who's able to answer this. Okay, this is somewhere in India. Probably someone who loves historical temples, monuments. They can answer this. Okay. May I know who is about to answer from this side? Anybody? Yes, sir.
Temple.
Yes, sir. That's perfect. And may I know you belong to which city?
I'm from Chennai.
Chennai only. Have you been to this place, Akshadham Temple? No. Okay. Can anybody tell me this Akshadham Temple is situated in any cities if you know? Yes, yes, yes.
Yeah, we even saw the Leaning Tower of Pisa, and we have also seen Akshardham. This is in Delhi, we saw. And I would suggest or advise people, please don't miss Akshardham. It's amazing, it's beautiful, and you will get a wonderful experience. You will feel very good soul. It will.
The real complex, and this picture is only a small part of the real complex. There are a lot of things, lot of audio visuals, probably the best musical fountain in the country, and I mean amazing things to see. Yeah. And probably the best. It's a documentary movie on the life of the Guru, but probably the best filmed movie that I have seen so far. So good. Yeah. So all the best.
Thank you. And thank you for sharing your lovable experience to us. Okay, moving on to the next. Let's see if anybody is able to guess this place, at least the city. If not the place, at least the city. This seems to be cinematic. Yes, sir.
Jaipur, Amer Fort. No? Oh, sorry. But okay. Look like it.
Anybody at the back who would like to take a wild guess? It's okay, even if it's wrong. But definitely it's not Jaipur. Yes, sir. Okay, Kumbhalgarh. No.
Great Wall of China.
Have you been to that place? No, I think you really want to be at that place. That's why you have given the correct answer. Yes, that's the Great Wall of China. It looked very tiny though on the screen. Yes, so we were not able to get. And what we could visualize was the forts of Jaipur and Jodhpur. Right. Moving on to the next. Okay, this is again a beautiful place. And this is going to be the one last. So let's see if anybody is able to guess. Ma'am, any guesses? No. Okay. Yeah, you are.
All right, so I visited the monastery in Coorg. I think this was my first monastery. I've never visited any other, and hence probably it stuck me that it's the same. Family.
Great. Thank you. So, one last time with one fun, which I'm requesting since morning, is to give a huge round of applause, round of applause, round of applause. Yeah, it would be great if I can hear you making some noise as well. I know being professionals, we are not allowed to do so. But yes, before we begin to see the amount of energy, the amount of excitement in you, I think we all can make some noise. Can we? Yes, this is what I'm expecting. She is full of energy. Thank you so much, ma'am. And so let's begin this wonderful afternoon. Okay, one more time. Oh, that was too loud. Anyways, thank you. So yeah, we are here to begin the session again. And may I request Mr. Sajeev Nair, Chief Technology Officer, Connect Digital, to kindly present on Total Experience Transformation through Digital Automation for NBFCs. Talking about Sajeev Nair, currently CTO of Digital IT Services at Connect Business Solutions, has 26 plus years of niche expertise in architecting and implementing enterprise class IT solutions in digital transformation, integration, and cognitive automation projects. He was a serving member of NASCOM SIG on engineering automation and ex-COD of NIIT Incessant Private Limited, a part of serving in senior roles in Emphasis Limited, Mindtree, and Happiest Minds Technologies. His current role and responsibilities include technology, direction for Connect Digital, and P&L ownership of digital engineering and automation portfolio of offerings. May I request you, sir, to kindly be ready for the presentation. You want this mic? Okay.
Good afternoon, everyone. Hope I am audible. Throughout the day, thanks for being a wonderful interactive audience. Being coming from the core IT services side, in fact, myself, my team, and many other guys like us, corely focusing on IT, we could get a lot of insights in terms of the technology advancements from the sheer user's perspective, the kind of challenges NBSCs are facing, so on and so forth. Thanks a lot for all those thought providing and giving some sort of fuel for our future innovation kind of sessions. Thanks a lot. As I have been introduced, Sajeev Nair. This is my 27th year in the IT industry, having worked in most of the tier 1 IT services organization like Wipro Technologies, IBM Global Services, Emphasis Limited, Mindtree Limited, Happiest Mind Technologies, and since last 1 year, I have joined Connect Digital. It's an S2L Tata company called Tata BSS, Tata Business Solutions Support Limited. It's a fully owned subsidiary. Last year, January, it has been taken over by another 1.5 billion conglomerate, Corp Limited, and being rechristened as Connect Business Solutions Limited. And Connect Digital is the IT services division of it. We have a huge, close to 40,000 people business process outsourcing unit as well. That's part of our Connect Business Solutions Limited. And Connect Digital, myself and my team who are participating here today, part of the end-to-end IT services division called Connect Digital. We have differentiated ourselves as a 360-degree digital transformation provider. When you talk about digital transformation, multiple phases, to be precise, 3 pillars: customer experience, customer engagement, operational efficiency. The all kind of technology landscapes, product scenarios where many of the pain points today, other leaders were talking about and solutions they were envisaging, all those technology wherewithal in terms of implementing that, we provide. With this backdrop, let me just get into my session of today. Total experience transformation. Many of us, okay, who keenly follows analysts will be thinking, oh, again, another jargon. What is total experience transformation? In fact, since I think last 6 or 7 quarters, Gardner coined this particular term, total experience transformation. So we talk about customer experience, digital transformation. Total experience is a term Gardner coined for taking care of customer-facing, especially B2C applications where customer experience is predominant. Customer experience plus employee experience. Employee experience in the sense, see, the customers has to be served properly. Employees should be empowered. With examples I'll talk about. For example, NBFC or a banking scenario, the first time a customer interacts with a customer relationship manager or a branch assistant or whoever, that interaction has to be worthwhile in terms of making some sort of an upsell, cross-sell, or making an at most satisfactory customer interaction, etc. For that, we have to make employees empowered. So customer experience plus employee experience plus multi-experience. It's omni-channel experience. It's nothing new. So CX plus EX plus MX plus UX, user experience. So we are talking about design thinking era. From users perspective, every end-to-end business process has to be thought about, as well as we have to design in such a way that with minimum steps, enterprise services should be reachable to customer. So total experience is a term coined by Gardner for CX plus EX plus MX, multi-experience plus user experience, nothing new. So in NBFC scenario, how we'll cater for that? In the next 10 minutes, what I'll be doing, the market challenges from an IT services practitioner's point of view, that's all. Okay, I will just try to cover the typical digital transformation roadmap, which we suggest for our customers and some of the initiatives we have done for our customers. Then the technology enablers, what are the things we have, technologies we have, so that that can be accomplished. And of course, maybe 2 seconds about my organization in terms of our capabilities. That will be the agenda. Here, all domain experts, leaders are sitting over here. Purely from an IT services perspective in terms of the solutions, the point solutions, solution accelerators, many of our NBSC customers are asking us from that perspective, the kind of challenges, what they are facing and for which they are trying to reach us out in terms of mapping some solutions. I could recollect a few points is asset quality deterioration, rising NPS basically. As banks, okay, after a lot of bad experience become very strict around the kind of sample space or user base for which all these lending services has to be provided. Of course, NBFCs time and again have to dilute in terms of getting into their sample space or their prospective customers. So proportionately, the NPAs also is being rising. So for that, what sort of due diligence we can do, some sort of delinquency measures we can do so as to reduce that. It's a common challenge, and many times we interact with our customers, they also comes with that, and for that, many solutions, whether it is an automation solution or data analytics, data lake based solutions, which we do some sort of a cohort analysis in terms of sample space or a particular product, which set of customer space is being looked at. All those kind of factors comes under that. Rising customer expectations. In fact, nowadays customers, with the first interaction itself, with the minimal, maybe digital interactions, they have to reach out to a satisfactory, some sort of an interaction, which will culminate in a positive result. So customer expectations are getting sky high, especially post-pandemic. So our digital solution also to be up to the task. Shifting product needs, etc. The rising fintechs we are talking about. See, nowadays, you people can count on the number of fintechs who has already been applying for the NBFC licenses also. So maybe next year summit it can be an NBFC plus fintech kind of this thing. So you have to bring fintech also into a peaceful coexistence kind of a scenario. All these needs. So these are some of the challenges we are facing. So here nothing new. So today, based on many of our speakers, based on their core area of focus, some of our colleagues from collections projects, they have equated NBFCs with it's a collection organization, etc. So I have not ventured into that because we are an end-to-end IT services provider. Minimal imperatives for a core lending system should be there. See, the way we'll be creating them should be modular because the kind of customer requirements keep on changing. Some sort of smart lending aspects comes into picture. One point in time, a customer had some sort of an interaction for lending purpose. Based on that particular customer journey, you have to map that particular customer journey properly so that in the few next interactions, whether upsell, cross-sell, or culminating into a successful lending end-to-end operation. All those kind of things, scenario you have to do, add use cases, extending your customer journeys, etc. Your architecture, the technology architecture, by which your lending platform you have created should be in some sort of a modular architectural scenario. Then smart lending. See, AI, ML technologies, wherever needed or not, we keep on talking about. Else, a particular session from anybody, especially a technical person, will be incomplete. That's the perception, industry perception. But in this particular smart lending case, etc., it's of course it's necessary based on the past record in terms of the interactions a customer has for any of your products. Okay, if they can really count in terms of the past learnings, some sort of predictive analytics, AI models being put together. In future, the kind of delinquencies or any sort of delays happened or not so positive kind of interactions, a particular business process journey happens in the course of lending. All those things, okay, we can take care, or we can do some sort of a predictive learning aspects being infused, taken care in future using some sort of smart learning, lending platforms, etc. Of course, collection management, one of the key aspects. Automating collection management. Products are there, umpteen number of products are there. Today, multiple products, demos we have seen, etc. Many booths are there outside. But using the basic end-to-end automation tool sets, the low-code application platforms, RPA platforms, if you have the end-to-end visibility of the collection management process, of course, with much cheaper alternatives, we can have some sort of a greenfield implementations as well. So these are all the digital imperative we are talking about. Whenever we'll talk to NBFC CIOs, CTOs, etc., how these all can be accomplished. In their roadmap, it's there. Today, one of our esteemed guests talked about a right mode of dealing with IT services organizations plus NBFCs being part of their digital journey. Okay, from CapEx initiatives converting into transaction-based OpEx journeys, etc. To make all these things possible, you need to have a coherent digital strategy, which will help you to have an extensible platform architecture so that your core lending platform, the need as it arises, it can be extensible kind of a scenario. End-to-end process automation. If you are, see, who is the best custodian of your business processes, whether it is collection or core lending or whatever aspects, your own SMEs. So the business process is there. Then it's just a matter of implementing that with any sort of an affordable technology. So there comes the process automation parts. There are so many platforms. Many of our speakers talked about low code, no code platforms. I'm leaving that no code aspect from that because of having a lot of serious customer backlashes in the past with some established products. I will talk only about low code products. Okay, no code, let us leave it aside. So process automation comes into picture. Then we talked about data modernization and intelligent decisions comes into picture in terms of even arriving at your sample space of the proper customer base whom you can do lending services, so on and so forth. So we are talking about customer 360 data hub solutions where your current existing sample space of your existing customer list based on some sort of a cohort analysis or KPIs all together, arriving at the kind of segment where you have to focus on. All these aspects comes into picture. Data modernization, intelligent decisioning aspects comes into picture. The total customer experience transformation I just touched upon, I'm not talking again. Legacy modernization, of course, imperative, CAO's imperatives that existing all software assets to be protected so that in an OpEx model, the future digital IT initiatives can be done. I started the session with the total experience transformation. So somebody talks about it's nothing but CX plus, EX plus, user experience plus, omni-channel experience. Kind of a scenario for your digital strategy you have to come up with. See, most of the NBFCs, our customers, in fact, we have suggested this particular digitalization roadmap, basically. When we talk about end-to-end digital transformation, all the activities you can divide into three pillars: customer experience, customer engagement, operational efficiency. Of course, with minimum steps, how the customer can reach out to your enterprise services, whether it is lending or whatever it is. That is the customer experience we are talking about. All the software solutions, technology platforms, which will help you to achieve that, comes under customer experience tower. So there, some set of initiatives, what you can do is what right side I talked about. Today, many of our colleagues were talking about super apps. Okay, all the enterprise services, okay, putting in a same portal or a web mobile app, so on and so forth. Super apps talks about a mobile app. Like the first point I'm talking about, a unified portal. All the enterprise services, okay, putting under a single portal so that to have a single access kind of a scenario. Many of our customers have done it, some sort of software platforms. A lot of options are there. I'll discuss that. omni-channel CX, okay, making all, whether it's through a super app or an omni-channel web portal, so on, so your service should be at the fingertip of customer. Then hybrid mobile apps we are talking about, whether it is Android, iOS, etc., making that application available. Reactive web applications for dynamic responses. Today is an era, all of us would have heard about some very cost-effective open source technologies, full stack application technologies. You would have heard about React.js, AngularJS. It's all which you will be able to create cloud native, rich internet interfaces. Okay, and see, every submission of customer data or whatever data, it should not go into the server side, passing through multiple network calls, etc. These kind of facilities being provided by technologies called full stack technologies, a set of technologies called mean stack, MERN stack, LAMP stack, etc. So using that, we can create all your customer facing applications as reactive web response applications together. Then hyper personalization. Every customer thinks that I am the one and only customer that particular NBFC or any other vendor has. So that kind of a personalization is the expectation of the era. So we have to be equal to the task for that. So all these use cases can be satisfied by a set of technologies we call as customer experience technologies. Then comes, see, rich internet user interfaces alone cannot win the hearts of the customers, okay, especially in the case of NBFCs also. So the customer engagement or the backend process will be optimal. With minimum steps, customers should be able to access your enterprise services. So for that, we have a set of products are there called dynamic process automation products, irrespective of the technology. Any steps of CLM, client lifecycle management, whether it is targeting and acquiring the customer, the first step, once the customer comes in, customer onboarding, KYC, so on and so forth, then throughout the life cycle of that particular customer, think of a lending circle. It's a customer services part. Then, of course, the final part is creating and maintaining a loyal customer base. See, these, target cross-sell, upsell, creating a loyal customer base. This is the last part. So there comes analytics technologies, etc. So throughout this life cycle of customer life cycle management, I will say, all these processes, end-to-end processes, there are a set of tools we call it as low-code application platforms with minimal turnaround. One of our esteemed speaker today talked about the basic lending end-to-end workflow. 30 minutes we can make. See, being an implementer, I will say maybe 2 or 3 weeks, the basic end-to-end process flow will be able to implement kind of a scenario. Roughly, the thumb rule is 1/3 of the turnaround time after end-to-end process implementation. Otherwise, we'll use any other technologies using this low-code application platforms where your end-to-end business process can be mapped as simple as some sort of flowcharts. It can get compiled and integrated with the various target system endpoints, etc. We will be able to create dynamic process flows, low-code application platforms. We have expertise in some sort of platforms called OutSystems, Microsoft's Power Apps, Pega, APN. These are all some of the tool sets. Then hybrid integrations to connect on-premise cloud-based applications. Okay, see, your business processes based on some sort of a restriction on IT services budgets over a period of years. All your core processes may be lying in multiple heterogeneous applications in the landscape. In that particular scenario, of course, a new process flow end-to-end we have to create. A lot of integration points will be there. How you will integrate your process flow with system of records or the various backend data systems, etc. So there comes hybrid integrations. A lot of technologies tools are there. Today I was just having a discussion with our Chola CIO, DP sir. So they are using WSO2. Okay, it's another technology. It's open source technology. MuleSoft, TIBCO, a lot of technologies are there. Hybrid integrations we talk about. Then, of course, creation and the monetization of API economy. See, because fintech ecosystem, your target customer ecosystem, a lot of reusable business processes are available as APIs, and you should be able to create a strategy for efficiently managing, leveraging your API economy kind of a scenario. Then, of course, many times fit-for-purpose use cases will be there. For example, in your case, employee experience transformation you are providing. So rather than creating from scratch greenfield implementations, you can go for service now. It has very I will say credit-worthy, credential, best-in-class kind of employee transformation processes, so on and so forth. Of course, many of you are using Salesforce for CRM, using it as a low-code application platform. Today itself, multiple discussions I had with many of our partners, etc. So all these kind of fit-for-purpose use cases. These are all comes under the customer engagement part of it. Of course, now all the CEOs in the gathering will agree with me. All the CEOs will be wanting to have utmost customer experience, utmost customer engagement with no investments, isn't it? Minimal investments. Okay, there comes the operational efficiency part of it. So, creating cloud native applications, all your ongoing application development lifecycle with agile DevOps kind of processes, etc., so as to reduce the turnaround time of your implementations. Okay, then cloud apps, cloud security, all those kind of things comes under the operational efficiency part. See, in fact, we have our implementation case studies and experience in all these particular areas. See, then we talked about the roadmap. Then what sort of technology can be applicable? I've just mentioned, again, just to bring some sort of mother to the madness, the technical enablers. So irrespective of the process, I just talked about the end-to-end CLM life cycle management, whether it is targeting, acquiring customer, onboarding, throughout the life cycle servicing, and targeting and acquiring a loyal customer base. Okay, in all these cases, low-code application platforms, okay, the existing systems of records, how through omni-channel way, we call it as engagement zone, a set of business processes, okay, built in a rapid mode can achieve that particular fact. This is a low-code application platform, rapid application development. Roughly, confidently, you can showcase one third of the turnaround time. Otherwise, it will take for an end-to-end application implementation, whether it is cloud native, whether it is web application, whether it is mobile application, using low-code application platforms is possible. So, again, I mentioned about Microsoft Power Apps, OutSystem, multiple platform choices are there. So, what actually by virtue of low-code CAOs are achieving is customer experience transformation. Any use case in your scenario landscape, you just have to look back. It will result in the growth for me for the particular financial year, increase my market share, increase my CSAT, increase my net promoter score, increase my cost of customer acquisition. Cost of customer acquisition. In that case, it's a typical use case for customer experience transformation. Please equate it with all your NBFC use cases. Workplace innovation, I told already. Your internal employees should be empowered so that he can take on-the-spot decision in terms of serving the customer properly. Process automation part I talked about. Then application modernization, how the existing software assets or hardware assets will be protected and reusing them to the maximum extent to have the future applications being created. That is a low-code application platform. 50% of the digital imperatives we are talking about, the smart lending platform, modular extending modular lending architecture, all those kind of things will be addressed by low-code application platform. Then RPA, robotic process automation, at least 2-3 quarters before it was the rage. Now I think it's on the, I will not say it's the slope of enlightenment or trough of disillusionment, I think, as per Gardner. See, the end-to-end collection processes, by virtue of being in operation for umpteen number of years, we know collections initiation onwards, the cycle closure successfully in the positive scenario. We know all the process steps, etc. And a set of very cost-effective tools are there called RPA tools. Then it's another option rather than going for off-the-shelf products, etc. You have domain experts together, years together, they have done that. Have your process map chart, etc. I just mapped there using RPA, using UiPath, automation, or any other tool. See, only few process steps. In fact, negotiation and legal actions, there only manual intervention is required. Technology, not much will be of use. They are also in a limited way. And see, predictive analytics for collections in the first step, the third one. There may be some AI/ML use cases. Okay, machine learning, supervised machine learning, CNN algorithms, etc. can be of use. Otherwise, using any of the cost-effective RPA tools, it can be Microsoft's Power Automate, UiPath of the world, whatever we can use. For at least I have 6-7 implementation case studies in the last 1 year where we have successfully implemented a end-to-end collection automation platform for our enterprise customers. So it's a good enabler. Every one of us are talking today in so many of discussions in terms of importance of data cleansing, not having the significance of not having stale data regarding the customer, choosing the right customer segmentation for upsell, cross-sell, and even the first-time sell, etc. So we are talking about customer data 360. It's nothing but creating a data lake from all your available source systems, lending systems, any input regarding the sample or possible focused customer segment, etc. Create a data lake. It can be an Azure data lake, any other data lake platform, multiple products we focuses on, Snowflake, Incata, Cloudera, Azure Data Bricks, so many things. So here a basic data lake we are creating. From there, a particular branch manager, example I have put, or a customer relationship manager, what sort of data from that particular data lake you want to just extract in terms of, for example, a recent implementation, not for an NBFC, what we have created, we called as relationship manager workbench. It was for one of the premium India banks, credit card cross-sell. It was the scenario. See, what they were facing is the relationship manager, first time or today, he's having an interaction with n number of the customers who is calling and asking for maybe the credit limit extension of the existing credit cards, or maybe extending the limit of a credit card or credit card based loan, some lower percentage or whatever it is. All these kind of requests, when we do, what normally happens, he will thankfully put us on hold. Then he will come back and say, I will get back because this many information, etc. is not there. So what we have created for that particular bank is a customer data 360 data hub. From there, we have created an RM relationship workbench based on a set of KPIs, key performance indicators, okay, regarding that particular customer in the past so many number of years, okay, regarding his loyalty. There is something called the RFM analysis, recency, frequency, monetary value of his interactions. How recently he have done some major transactions, how frequent is his transactions are, and monetary value, how large the kind of the monetary value chunk he is performing, etc. Based on this RFM analysis, we have created a dashboard by which these relationship managers should not, or he don't have to get back into multiple systems, search and give you a concrete answer. Okay, so those kind of scenario, etc. So customer data 360 hub, especially NBFC scenario, avoid all sort of delinquency, pre-delinquency, awareness, etc. Creating or arriving at the right set of customer segment for your current projects to be focused on, your future products be focused on, all those kind of implementation. It's a must for all of you. So many cognitive automation use cases. Okay, some of them I just talked about, using AML, faceless, paperless eKYC, end-to-end loan processing using RPA, then addressing the new market segments, potential means existing market segments which have much more potential, which I am not servicing now, or some underserved markets, etc. How we will be able to do using the customer data 360, that dashboard which I just talked earlier, using an effective API economy. Multiple use cases are there. I just touched upon earlier, from heterogeneous data sources, how using the predefined software chunks, you will be keep on reusing those particular data segments, etc. Blockchain, I'll say currently it's an overkill, but these few trends we should have put. In fact, I have one of my core experience with blockchain implementation was this background checking of potential candidates for one of the foreign universities, Yale University. Okay, immutable lists. You will be able to put one guy, as soon as he comes out of school or college, his credentials are being put since his first offer, where and all. His credentials will be put in an immutable data sets in a blockchain. Then all these background checking agencies, because now immutable means once you put it, never it can be deleted. The possibility is not there. Of course, smart contracts, etc. is there. It is possible, but in normal scenarios, etc. In that case, keep on, he will be switching organizations, etc., and this the chunk will be going on like that. Yeah, so already I've got my pre-delinquency warning. Okay, time is getting over. See, some of the total experience solutions, it was a summary slide where whatever points I just talked about to achieve these kind of KRAs, what are the end-to-end software solutions you people will be doing? Many of us, you can already equate. Some initiatives you would have already completed, or some you are in middle of, etc. So end-to-end providers like us will be able to support that. This is the end-to-end services of ours, customer experience, customer engagement, operational efficiency, all the services of ours we have put, and the product partners we have put. Basically, anytime we will be able to support in terms of any of these things. Some of the case studies, a few of them for the NBFCs I have just mentioned, some of them were award-winning for us. Yeah. That summarizes effectively my session. We have a booth over here till maybe 5, 6 we will be available here. Thanks for a patient hearing as well as having good interaction. Thanks a lot. Thank you.
Thank you, sir. And may I request A. Ramesh Kumar, Chairman and MD, Laraksha Impact Finance Enterprise, to kindly climb up the stage and to felicitate Mr. Sajeev Nair, Chief Technology Officer, Connect Digital. Please, sir. Thank you, sir. Thank you, both of you. Moving on to next, may I request Mr. Arun Subramaniam, co-founder and chief business officer, Sharpsell, to kindly present on the topic, the modern selling, a seller's perspective.
So do we have a slide change on? Yeah. Could I have a slide changer? Oh, this one is it. Okay. Thank you. Okay. Good afternoon, everybody. This is Arun here, co-founder at Sharpsell. So I just wanted to share, my experiences of spending a lot of time on the field and understanding how selling actually works. So with the name, I'm sure you kind of would probably relate. So we kind of make tools to help sellers become experts when they're in front of the customer. And our journey has been quite interesting because we started. Does this which change slide? Okay, thanks. So we started in 2010 as a learning tech company where a lot of our focus was on something called simulation-based learning, where we help CXOs and CEOs understand the hard and soft skills of running a business using business simulations, and that kind of worked quite well. We did a lot of work with middle managers after that. They liked what we did. And we're today the world's largest simulation platform provider as N Paradigm. So that company was called N Paradigm. So that worked very well. But what we realized was that, when we started working with middle managers, they liked what we did. They said, why don't you work with frontline sales teams? And when we started working with frontline teams, we realized that what worked with senior managers doesn't really work with frontline teams in terms of learning. So we created a few mobile learning modules. We rolled it out to people, and we said, let's see what happens. And post rolling out, we realized that people did these modules for about 2-3 days, and after that, they would stop doing it. And when we tried to understand why, and typically, you do follow-up calls, call up and say, sir, kya hua, bhaiya, kyun nahi kiya modules? And people would say, you know what, the modules are very good, but I really don't have time. I'm on the field, I'm going around talking to people, so please excuse me. So we said, no problem, let's kind of shadow some of these guys. And when we shadowed people, we realized that, they have a lot of time. They would have typically anywhere between half an hour to 2 hours every day, which is unplanned. But people would still not go back and learn. And when we tried to understand why, people came back with 2 reasons. They said, one, Arun, this is all gyan. I know this because I do this day in, day out. So don't give me gyan and tell me what I should do again and again, because I know that. Whether they know it or not, the answer was, I know it. And the second question that they had was, they said, hey, my problem is not that, I don't know all this. My problem is, how do I look like an expert in front of my customer? Because I get one chance with this client. So in that one chance, I have to go ahead and impress this person. So if you can help me look like an expert, then we'll talk. Otherwise, all this is gyan. I'm not really interested. And what we also realized was that salespeople were looking at immediate gratification. So for them, as long as they could use something today, tomorrow, you made a lot of sense. But the moment you say, hey, why don't you study this, come back and use it in a month's time, they lost interest, because for them, 1 month is already long-term plan. So their first objective is to say, how do I not get screamed at by my boss? Because every week, the bottom 25 percentile gets screamed at in a weekly call in very uncivil conversations. The next was to say, how do I hit my numbers and get my incentive for this week and this month? And then you talk about saying, hey, how do I look at my long-term plan? How do I look at what my career growth is, etc., etc. So we realized this was the reality of what the sales on the front line was across different industries. So specifically, we spent a lot of time with insurance advisors, people selling bank products, CASA, asset products, mutual funds, etc. And the reality was very, very similar across. So what we did was we took a sabbatical, myself and my other co-founder called Hanuman. So we took a sabbatical from the learning business that we were doing. And we spent a lot of time on the field. For example, Hanuman became an LIC advisor, spent time with LIC advisors on the field to understand how people sell insurance. I spent time on, in 20 plus small towns in India to really understand how financial service products are sold. And with this, we created, a product called Sharpsell. So the whole idea of Sharpsell was to say, how do you make your sellers look like experts in front of the customer? And how do you make your sellers sales ready when they're not in front of the customer? And initially, we started working with insurance companies because I think our research started with insurance. And now we work with banks, NBFCs, mutual fund, AMCs, et cetera, et cetera. So, and we won a lot of global awards. We have more than 3 lakh people using our platform day in, day out. And these are some of the clients with whom we work. So the idea here was to share some of our thoughts in terms of what we've seen working on the field. So when we started, before we started getting deeper into SharpSell, we did a lot of primary research. You speak to people in senior management, you try to understand what are the support systems that are already available for the sales guy. So you'll see that, there are a lot of these initiatives that go on sales, L&D, etc. But what we realize is, one, for most people, sales is not a dream job. So they land there because that's probably their last option job, or that's the only job that they found. So you seldom hear people talk about, wanting to be somebody super big in sales. And that's the reality for most people. They graduate, they have to find some job, and this is a job that they get. Second is the engagement with, the sellers on the field is very low because most of them are on the field. So the single touch point you have is with your team lead. And a lot of times people don't even come to branches. So the second question was to say, how do I keep them engaged? Because I think, what I'm telling you is I'm going to apply pre-pandemic, and I think it's kind of rearing its ugly head again. So NBFC Frontline was one of the few industries where we heard people talk about monthly attrition rates outside of BPO. So people would talk about, hey, what's your attrition? It's like 6%, 7% per month. But otherwise, it was very easy for people to jump jobs because, for 1,000 rupees, people will jump job. And the deal was that if you could just jump jobs for one company every year, you have, 40 companies out there and you could actually get your career done. So it was quite easy for people to switch jobs. There is, you put too much pressure, people, that you're going to switch. And the engagement part was becoming an issue. And the third part was productivity. There's a lot of attrition, infant attrition that came in. People who stayed, there's a big, push to retain them, etc., etc. So this is what we realized was a reality, and the plain vanilla learning that we started with didn't really work. So what we did was we looked at what really was the challenge that they faced, which the training at that point of time was not really solving. So what we realized was, one, they really don't have a lot of knowledge about industry and the product. And a lot of times what we saw is companies start with product training. You get them into a class, you tell them about the company, and then you say, let me tell you how 10 of our products work. And there is a lot of hurry to dump a lot of product knowledge on them with a limited window that you get with them. And we've seen that most people don't retain any of that, and most of it goes over the head. The next is, even though people might know products, they're not really able to relate to the customer issues and customer problems. So, it's not to say that they can't talk about the product, but they're not really able to pitch the product which relates to the customer. So you would still go and say, sir, hello, I want to talk to you about ABC product. And that typically falls in deaf ears because customer keeps hearing the same pitch again and again. On the phone, you have people calling up, messaging, etc., etc. The next is you have like poor sales, customer management skills, ability to handle objections. So I think all of us can relate to some of this. So I don't want to get into the details of each of this, but these are typically, issues that we saw. And the last one is a little important because when we spoke to people, there are a lot of resources to help them learn. People say, I have training, I'll give you brochures, etc. But what we saw lacking was material for them to train or educate the customer, because you either have marketing collateral, which was too high level. A guy on the field will never use marketing collateral, or you had content which was training content, which is too simplistic, which you can't use with the customer. So what we realized is there's not enough material for the guy on the field to kind of engage and educate the customer, because it's not really possible for somebody to absorb everything, learn everything, and then go educate the customer. That's not that doesn't work with 90% of the frontline sales teams that we have seen. That's not the profile of people who are working there. So with this, we realized that, we have to do sales enablement. And one of the, cycles that we got stuck with is that people would typically, so before I go into this, so what we had seen is people would typically call, the top performing guys and say, hey, let's try to understand what these top guys are doing. Let's replicate it across, and then we'll percolate it down. And we saw that failed miserably because the expectation that the habits of the top performers can be replicated by everyone else doesn't really work, because they are doing something because of who they are, and there are certain other people who are not doing it because they either do not have the ability to do it or they do not want to do it. Maybe some small percent can benefit from that, but to kind of say that let's replicate everything failed miserably. We tried knowledge management, we tried sessions, etc., etc. That didn't work. So when we dug deeper, we realized that this depends on two main things. So first is what we call buyer maturity, and other is seller maturity. So buyer maturity talks about how much of your product category does your buyer really understand. So if you say insurance, there are some people who already have insurance and they know what they're getting into. There are other people who don't have even, let's say, basic health insurance. So what you look at in terms of how much of your product is your buyer familiar with, and how easy is it for them to get into your ecosystem and get going. That's what we are going to call as buyer maturity. And the other part is seller maturity, which is at what stage of maturity is your seller in the market. So when you look at buyer maturity, I'll say low is where buyer is unaware of what the product is, and high is where they need to know. And you just have to tell them why they should work with you and not with your competition. So there you're not educating them about the product, but you're really telling them why you and why not somebody else. And when you look at seller maturity, a low seller maturity I would define as somebody who knows the product, who can go and who's kind of let's say by-hearted a pitch, who can go and like pour the pitch out, but can't really do anything beyond that. So the next thing they would say is, I'll get back to you, sir, or they'll say, let me call you my senior. So, and somebody with high is somebody who's experienced, who knows the product, and they are typically people who don't, the top 20% of people who probably give you 80% of your business, who don't really need a lot of traditional handholding because they know what they're doing. And what we realized was that, and of course, the other part is product maturity, which I'm not getting into because that's very, very specific to the organization. But assuming that everything else with product is similar, what we've seen is what has to be done to enable a seller with respect to the kind of buyer is very different for different categories. For example, let's say if you have a low seller maturity and you have a low buyer maturity, the whole idea here is to say, how are you going to engage with the customer? Because the customer does not really know a lot about your product or category. So the question should be, how are you going to enable your salesperson to engage with your customer? How are you going to help your salesperson understand the basics, and how are you going to help them learn the basics from peers? Because in this case, they don't really have to go and wow the customer. They just have to stay with the customer and ensure that the customer comes in. But when you look at a place where your seller maturity is low, but your buyer really understands the product, buyer knows what they're getting into, they've experience with your product, etc. What is really required is ready-to-use sales pitches, just-in-time objections, comparison FAQs, because the customer knows way better than you do. So how are you going to help them just in time, and how are you going to help them wow the customer at that point of time? And the expectation is that they'll just have basic knowledge to tell the customer that, hey, trust me, I know that you know more than me, but please trust me, I'm here in this with you. But if you go to the other side where seller maturity is high, they already know how to handle customers. So when you talk about somebody with a buyer who does not know about this, what they want to do is to say, hey, can you give me some tools where I can portray this customer story back to them? I have to tell them that I understand their reality. So give me tools where I can just use to capture their basic reality and tell them something back. It's something that really works well. And let's say when you have seller maturity is low, seller maturity is high, buyer maturity is high. This is where a lot of traditional tools in terms of enablement don't really work, because every seller who's mature has their own way of selling. So they don't follow standard pitches. They've got their own pitches. They've got their own sales conversation. They've got their own flow. So there, you can't restrict them with saying, hey, this is how my tool works. This is how you're going to take a pitch. That really fails. So what they would want to do is to say, hey, help me how I can get referrals. Can you automate some of these processes that I do day in, day out? Can you help me ask for referrals? Can you kind of help me, create some of these presentations, etc., is what they're looking at. So with this understanding, we looked at saying, how do you make these sales conversations effective? So one of the other questions that usually comes to us is, hey, you say sales enablement, but we already have a CRM. So, so we can't do anything. We say that's good, because a CRM typically tells you, it does one of the two things. It says, hey, there is somebody called, let's say, Rohan. It says, go and meet Rohan and tell me what happened. Or let's say you meet somebody called Abhijit. It says, please tell me that you met somebody called Abhijit. But what happens during the conversation that you have is not really something that anybody has control on. So today we talk about data, we talk about how you're going to really look at using customer data, etc., etc. But one key part that gets missed out here is what happens during the interaction between your sales guy and the customer. How you're really able to one, equip this person to have a good conversation, and how do you track back what conversation is had on the field. So what we realized was the moment you ask your salesperson to punch in something, they switch off. I mean, for them, CRM is a overhead. They say, boss, this is, in their minds, it's beyond their work. That's something that they have to do in the evening, that they have to do on Friday, etc., etc. And the moment you say enter more information, they're going to zone out. And they'll, the reality is I only enter what is bare minimum required. So what we say is, as part of Sharp Sell, the moment I allow you to, let's say, create hyper-personalized presentation for your customer during the customer meeting, and you're able to share it on WhatsApp right then, right there, what we say is you're not really giving me any more information. You're making something for the customer. You're sharing it. And what I do in the meantime is to capture all that data. So there's nothing that you're doing for the management or for a sake of process. But what you're really doing is to use a tool that enables you to have good conversations, a tool that enables you to stay in touch with the customer, the tool that enables you to show that you're the expert. And that's all completely, your branding, your photo, etc., which is for your benefit. But by the way, we also understand what is happening and we keep tracking this, etc., etc. So this is something that we really worked on. And the whole idea was across different stages of your sales conversation, how do you really help them at each stage? Because the other thing about learning was always considered like a corporate agenda that somebody is putting on your head. So our question was to say, how do you make people come to learning? And how do you make people do that while you enable them with all these things? So we said, let's look at the sales cycle. You talk about getting a meeting, follow-up, customer meeting, then you onboard, then you do upsell, cross-sell, etc. We said at every stage of your customer sales process, our objective was to say, how are you going to make this person look like the expert, so that at every stage the customer knows that, hey, this guy is able to get back to me real fast. This guy knows what he's talking about, and anything that I want, he's able to get back. So you talk about tools for customer nurturing. We use something called marketing posters, where we say every day you can send a short note about your company, about your product, without appearing salesy, because 95% of your leads you don't really stay in touch with as a salesperson. Same way, when you talk about in the customer meeting, how are you going to make presentation based on customer reality? If a customer says, hey, I want to do something, I want to take some personal loan for my marriage, then how are you going to make a presentation which says, sir, we have helped hundreds of people, get their daughters married off. Please work with us. That's very different from saying, hey, we have a personal loan, interest rate is between X and Y, give these documents. So how are you able to convey that emotion to the person? Because in case of loans specifically, even though customers come to us, they're not only coming to us, they're going to go to like 10 different people. So how are you going to stay ahead of the curve and say, you know what, I know you have asked 5 different people for the same need, but I'm the one who's going to help you, walk the path. So this is something that we do as Sharp Sell, and I just want to talk about one small case study. So we work with a huge financial service conglomerate, and post implementing Sharp Sell, so we did 2 things. One is we said we'll kind of handhold all new employees who kind of come in for the first 3 months using Sharp Sell learning, and post that there is an enablement that kind of, I talked about the sales process, how you do it. So what we saw was, for all the people who are active on the platform, their sales went up by 50+%. There's a 40% increase in the average sale in the first 3 months when we handheld those people. And there's a 50% higher number of files compared to, for who are completed at least 70% of learning, they were able to do 50% more business than the people who did less than 70%. And typically you have like, the whole engagement level also goes up, because we have about 4 million plus conversations happening per year, 97% of people adopt. And with a certain client, we've also had a case where by using these enablement solutions, we were able to understand agents who were interested in working with us, but who never gave us any business. So we looked at the activation level there, we looked at the engagement levels, and then figured out and were able to identify people who could specifically be reactivated. So that's what we try to do, where we say, how are you going to equip your frontline salesperson look like an expert? So this is Sharp Sell, and one of the other things that we've done is we started as a mobile-first platform. Now we've become, we're moving towards what we call a faceless Sharp Sell, where you say Sharp Sell should be available wherever your sellers are. which means that if it has to be integrated with your Salesforce app, it is integrated. We have SDKs. If it has to be integrated as a browser plugin, it is available in Chrome. It is available as a web app. If you say it has to be integrated part of your sales flows, it is available. So we're looking at, other CRM integrations, etc. So the whole idea is, how are you going to enable this salesperson to sell better and improve their productivity is what the focus is. So, like I said, we have a lot more case studies. We have a lot more learning in terms of implementing this across different NBFCs. Be it like housing finance, be it like personal loans, be it selling like two-wheeler commercial vehicle loans, etc. So we've got a lot of case studies where we've seen some success there. So I just thought I'll use this platform to share a brief idea of what we do at Sharpsell and share some of our success stories. And if any of you are interested to knowing more about what we do, we are available right outside. And that's it from my side. I thought I'll keep it short. I'm sure we're, me included, are eager to see what the next panel has to offer to us. So with this, I conclude my presentation. So thanks a lot, folks, for your patient listening. Really appreciate this, and take care. Bye.
Well, thank you, sir. May I request Mr. Anil Gupta, Chief Partnership Officer, ARTH Impact Digital Loans Private Limited, to kindly climb up the stage. And to felicitate Mr. Arun Subramaniam, Co-founder and Chief Business Officer, Sharpsell. Please, sir. Thank you. Thank you, sir. So NBFCs have played an important role in the Indian financial system by competing with banks as well as introducing efficiency and diversity into financial intermediation. Digitalization has the potential to fundamentally transform the financial landscape by providing consumers with a diverse range of financial products at reasonable price and making financial institutions more efficient. The next panel discussion would be on AI/ML transforming the lending landscape and debt collection process. And to begin with, may I request the panelist Raj MKK, Chief Executive Officer, Credit Nirvana, who is the moderator, to kindly climb up the stage. Please, sir. Raj MKK, Chief Executive Officer, Credit Nirvana, is going to be the moderator. Followed by that, the panelist Ajit Kumar, Chief Operating Officer, Credit B. Navin Galada, Managing Director, Galada Finance. Arun Kumar Iyer, Senior Director, COO. Senior Director, COO, CRISIL. Please, sir. And last but not the least, Demishto John J, Business Development Manager, South SMB, Rapider Cloud Solutions. I request all the panelists to kindly assemble on the stage.
Thank you, everybody. This AI/ML, I think we have heard this multiple times today on various discussions. Even in the lending industry, it's a highly overused word and overused synonyms nowadays. So I would like to start from this panel, which is a very diversified experience in this, starting from CRISIL, one of the pioneers in the analytics field in India, and then from an actual lending experience, and also from a platform lending, etc., with Ajit also. So, see, the analytics, data analytics, statistical modeling, etc., has been there for many years. how exactly, actually, see, the thing is, lending is a, 30-day business. When a lender, give the money to the customer, he has to collect within the 30 days. And that's the thing, basically. Whether to collect that through AI, ML technology or anything, for a lender, it doesn't matter. It has to be collected. At the end of the day, that's the matter is, basically. And first is, the person should not bounce. He has to pay on the date, and that's the most important thing. Now, how do we do it? Through data, AI, ML, technology, etc., is a secondary thing. But then, how is that? Right now, this has become a very pervasive, relevant, a way of doing things, and see that this can help the lenders in their collection process. I would like to hear from yeah.
Thank you. Interesting question, and I've been in the industry both on the lending side as well as on the analytical side for almost close to 27 years now. Why AML is relevant today and not earlier? I won't say it wasn't relevant earlier, but I think everything boils down to the amount of data. I think if you look at the identifiable data, the way the data has been democratized in the last couple of years, there is a lot of data available. There is a lot of digital footprints that have been left today, which wasn't available about 6, 7, 8 years ago, right? When you walk into a shop, the way you do a transaction, the Google Pays, the social medias, there are a lot of digital footprints. So there is enough data available, and it is about how a guy who can write a very good AML code to make meaningful output out of it for the use cases, not only for lending, for anything else. That's what it is. And I think with the Open Credit Enablement Network, that is the initiative of the Government of India that's been happening, the data is going to be available. It's about who is going to use it, how they're going to use it, and how well they're going to use it. I think that's where the relevance has caught up. In fact, I would say the pandemic has actually accelerated the development of this data as a process. And that's why AML today is more relevant than what it was from the lending perspective about a few years ago.
Yeah, I mean, as a lending company, you run a lending company. So from that perspective, how do you see this?
To start with, everybody would have been aware of the Google chatbot, the humor which went, the engineer who was writing AI. After that, he said, no, there's a human intervention in that. So yes, AI is coming to a very, very accelerated space, quite accurate. But from lending space, what we need is, how do we have an AI to gauge the integrity of the person? How much ever collateral you take, whatever security you take, if the integrity is not there, then the loan goes bad, and which is what we don't want. So yes, we need to have a more developed AI and to look into integrity. But given per se what we have right now, it's very efficient, very easy to dispose. And yes, the risk is only 8% to be precise. Yeah, that's high to the industrial standards, but yes. So I guess AI is really nice. And the way we use it, as rightly my fellow colleague had said, that's something which makes a lot of difference. But going further, 90% of Indian population are yet to come into the digital crunch. So a huge market is available. And with the churning of data, diversification, what we have, I guess it's going to be a humongous growth.
Thanks, Naveen. See, one of the critical part for the collections or lending is that you should be able to predict what the borrowers will do. And it's not about predicting whether just that he will repay or not, but what actions are there required to change his decision or change his way of working, right? And that's where I think whenever you need to play this, okay, if I am doing this, what will be the reaction? That any kind of a programming or any algorithm will help. And that's why I think what's happening in AI/ML in collection is right now, they are able to tell you that, okay, for this segment of customers, if you take this, the behavior is like this. And this is helping you in decision making, right? So overall, if you look, okay, fine, these customers, you don't need to call them, they will pay, they have forgot. So you just need to softly remind them. And definitely that's what, if you are playing with, like at Credit B, we have millions of customers, right? So if you know that, if you are able to dissect the customers and then able to act accordingly, then that's where it is helpful. And that's how I think earlier the collection was like, okay, fine, you just need to call or you just need to visit the customer's home. Now it's no more like that, because you need to change the actions looking at the customer. And that's why AI ML is helpful and very impactful.
So what you are telling, if I can understand or allude what you mentioned, is that the appropriate use of the historical data, and then based upon using appropriate algorithms, and then if you can prioritize your customers, and then reaching out to them through a customized channels. So somebody may be, positively respond to a WhatsApp. Somebody may be positively respond to maybe a telecom, or somebody has to be reached through his house only, then only he will respond. So if you know this and you prioritize accordingly, and then reach out to them through a customized channel with a customized communication, even what you talk to the guy, that is going to have a change, even if it is in the higher buckets, right? And what about the integrity part, what you mentioned? I think, this is the very thing, actually. The collections in the AI ML, what I feel is, the difference is that traditionally it is considered that once you underwrite, and if you have a good score in India, say 800, 900 score, and then he's a good customer, fine, things are done, right? And it's on the assumption that human behavior don't change. It's not like that. Now, at this point of a time, he's a good customer. 6 months down the line, for various reasons, it may be his ability to pay or his willingness to pay. At that point of time, his willingness to pay may be different. And that's the integrity part which you mentioned. So how do we, what kind of data which we use and arrive at a precise, means I don't say 100%, at least 90-95% precisely say that this guy is a good customer till now, but this month his due date is 5th of the month, but he is going to bounce. And requires two things. One, his ability to pay and his willingness to pay. Is it possible to do it?
I'll go first on this, because that's very close to my heart in terms of what you said. When you say modeling basis historical data, you're right from that perspective. I think what changes from an AML perspective is you're almost accessing a real-time data, almost real-time, right? Maybe with a lag, a bit of lag, but humanly impossible for somebody to use their cognitive ability to kind of interpret and come to an analysis whether this guy is going to default or not default. But if I'm able to look at the digital footprints of the last 1 month in terms of, or last 2 months, because in India it's 90-day credit period in the past due kind of stuff. If you look at his transactions, is there been a dip in terms of what he is? Has his salary, something like an EPFO data, right? Whether the guy has been sacked and the salary is not flowing through it, the PF is not getting credited. These are alternative data sources. The moment you get some of these, and there is a dip in some of the usual, I go for a restaurant every Sunday, right? And suddenly he's not able to spend for the last 2 months. These are certain things that you will never be able to evaluate in a normal, traditional way of looking at it. One, given that we are a vast country. Second, our ability to even collect the data, you need to put a huge force and you're taking a huge toll on your operational efficiency. The moment we are able to get some kind of inputs there, I think, as we call it in the typical traditional banking way, the early warning or the proactiveness towards the delinquency and the approach toward delinquency automatically sets in. At any point of time, I'm not saying that we will reach 100%, but I'm pretty sure that given this kind of digitization that's happening, at least in India, where Aadhaar has become kind of a binding factor, where it's all leading to one identity, it's a matter of time that we'll be able to do that. And as I again reiterate, a data can only speak as much as how you can want to interpret it. That's how I see it.
apart from recovery, the AI, even for trends, the customer buying habits. So basically, a finance is preponing somebody's dream to come true. Probably if he can buy a house after 10 years, a finance helps him to prepone it. This is the basic reason of we fulfilling the dreams at an accelerated pace. In the same circumstance, we have a trend watching. The first, this guy buys a bike. Then after exactly 2 years, either he goes for an upgraded bike, which is almost 3 to 5 lakhs, or goes to a car. After that, he takes a personal loan invariably for him to be married. And after that, it is a housing loan. So this is usually a trend which we monitor with AI. And thanks to AI, what we were able to derive at this. Recoveries, the crust of any finance business, the most backbone of the business, but 90%, yes, it would happen, but the crust is the margins are wafer thins, and even that 2% is something which pinches us. So yes, I guess as rightly sir said, evolving over a time, looking at the trends, as for the COVID, it was waived off, I guess, for a couple of months, the civil scores. But eventually the ground reality was almost a year and a half. Everybody was, apart from whoever was in kirana business or medicine business or whatever, apart from that, major of them had an hull. So those were not reflected though. So I guess it's an evolution process which would go on, and I'm sure we'll come with a solution to read the human mind.
So I think what happens is that transition from a good customer to bounce, there are trends, always a trend. I mean, again, not always means 100%, nothing is 100 or 0, but probably 90% of the time there are trends. And as long as you can, again, with a prediction of 90%, you can predict that probably this person is following trend. And sometimes actually you can do a reverse action, right? This customer actually trend was not there, but you would still go slight conservative, right? If you were letting go of him just with reminding, nothing which prevents, like once assign a manual caller, just sir, your payment is due tomorrow, right? So these are the actions you do based on your trend analysis. Again, AIML will not be 100% right, but it definitely improves your systemic efficiency. What it helps is that it helps in, I mean, it's not just the collection ends by collecting your EMI. You want to maintain a relationship with customers so that today, if he has taken a bike loan with you, tomorrow when he takes a car loan, he comes back to you only, right? So, and unless and until he has come into a trend that was, I am not going to give him another loan, right? So in a way, AIML helps with your action in a way which is good for your long-term business, right? Otherwise, organizations, different departments working in silo can be a very disconnected organization, and sometimes a recovery guys is not bothered whether next time he comes to me or not, right? But AIML helps that it keeps your it helps in your keeping organizational ethos intact, and people work like they are representative of the company rather than what job they are doing. So that's why it is very helpful.
You want to add anything, John?
Just to summarize, today pretty much everything automated with the help of AI and ML. So we could see that the trend is coming up where all these people will be able to 90% or above will be able to pay it on time, and that kind of technology evolving around. That's what I would be able to share.
Thank you. So what Aditya has mentioned is very interesting. That today, actually yesterday or today, the RBI governor has come with a new regulations how the lenders could treat the customers, like what is being followed in the PRC Act in the US. So there are very prescribed norms which they are going to come up, in which when, what, etc. you would be able to reach out to your customers. It's very much needed in the pace in which the lending is growing in India. So this is where, what we tried, and it is working extremely well, is what we call it as ethical AI, wherein which you could use the data. See, that I will give an example. You reach out to the customers through a call center. The call center person said, I am infected with COVID. in the traditional way, she will put in her disposition that the COVID sick. It will take another 1 month to take some action on that. What we could do is basically, this is considered as a highly negative sentiment. Each conversation happens between the lender and the customer is getting evaluated. So analyze that it's a negative sentiment, positive sentiment, highly negative, etc. Or is there any extremely rude sentiment also can come. In that case, we send an alert to the appropriate party saying that, okay, this is what is coming as a negative sentiment, which is coming to should be treated in a separate way. So there are two ways of doing it. One, you need to understand, like you mentioned, the integrity of that response. Is it really, falsic or not? So if you can, communicate that to your field and the staff in the ground, and if you can confirm that, okay, he's really sick, and then within a matter of hours, his treatment can be changed. This is possible only through AI. This dynamically understanding a customer's behavior, his willingness to pay. He's able to pay, but his willingness to pay is now not there. And then appropriately profiling him in his risk. If he's in a medium risk, now he's going to high risk. Then appropriately customizing the treatment which you can take to him in a compassionate way. You could be rode with him at the original stage, but in a compassionate way. That's where these data things can help. So what we have seen is basically most of the large organizations have analytics departments, and they come with the behavioral scoring in the beginning of the month. But how do they use it in a dynamic way? Because the person you score at him as a medium risk guy, but when you talk to the guy, you understand that he's no longer a medium risk. And you have to change your treatment on a real-time basis, and that has to be executed on a real-time basis. This has to happen in 30 days period of time. That's where, from our experience in this one, if you use the data intelligently, real-time dynamically, and then customize to reaching out to your customers, prioritize them, then I'll give you an example, another example. Sorry. A customer who is in the NBS stage, and there's a sufficient going on with him, actually. And there is a level of negotiation happening with respect to close it out of the court. Then through a different methodology of data acquisition, we could gather that now there is another bank is putting a case against him. Now the situation has changed, right? So you need to get this information on a real-time basis and act accordingly. So this is not only for the arresting your bonds, even in your higher delinquency stage. If you use the appropriate data on a real-time dynamically, now this can be possible.
Being from the technology provided, I would like to take this first. So in the industry, we also call it as, in a layman language, sticky agents. So because here there are three parties are involved, basically individual and a contact center agent and a field agent. So the sticky agent can kind of, whenever this particular customer calls comes in, they will answer this call. So basically with this way of behavioral, and also the data is available via different industries, it could be insurance or different areas. This can be integrated, put together, and it is easy to identify with the help of AI and ML to the real situation. That's what I would like to add.
You touched upon an interesting point there, so I'll sum it up in a very different way. So if computers become humans, it is still fine. The moment humans become computer, that's where the challenge is, because the emotional connect that you may want to bring in, or the overlay of that, which is where the credit analysis is playing a big role, that cannot be taken away from any credit decisions. And I'm a big believer in that. Otherwise, all you need is just algorithms. You just run it. Why do you need a person, right? You just press a button and then it will give you the output. But somewhere there is a credit analyst overlay that comes in, and hence I always keep saying that better that humans don't become computers. Computers can become humans. That is still better world to live in.
beautifully summed up and beautifully said. Human intervention in AI, once it's woven up, I guess the whole society wouldn't be a secular society in long run, and it would be a very integrated, and I guess we'll be able to all grow in a dynamic way.
I may disagree with Arun here a bit. Right, human becoming computer in the collection landscape may not be a bad thing. You don't want human to use some of the words while being on collection. So if you make him work like a computer, he'll not use. So I mean, you will not need to say beep beep, right? Because he'll never speak. Actually, he will behave like that, and that's why I think. I mean, you are trying to make human act like a computer in a very specialized business circumstances. I mean, I agree with that statement that human becoming computer may have a long impact on society, but in this particular specific case, human acting like a computer may not be a bad thing, because I think collection, it's more about empathy and communication at all stages. Even when a loan has reached an NPA, empathy-based communication works, right? Even if lanes are, you had told me 5 days back that you will pay today. I mean, starting that communication sometimes can react in a very different way from the borrower, right? So I think empathy and communication is important, and both the places AI can be very impactful, and that's how I think I would sum it up that yes, it can help, and but of course, I mean, it will not solve your problem for collection. I mean, if anybody, I would say that, okay, fine, my 100% collection is based on AI ML, then if nobody will believe, right? And I know that that's not possible. But I'm saying that what AI and ML can definitely help, it can alter your behavior of collectors. It can help you in treating a segment of borrowers differently, which is good for your long term of business. And these are the two takeaways I have, right? Improve your attitude towards customers so that he remains with you, and second is that make your collectors efficient without being any kind of a negative disposition, or without having him doing anything negative to the what regulators or what you will feel that he shouldn't do. I mean, every organization has a do's and don'ts. So if AI ML can force and collector to ensure that don'ts are followed, then that's a good thing.
Absolutely. At least in India, in the collection space, humans can never be computers. Actually, here it has to be human driven. It's a very, very large section of population needs to be addressed through. However, and that execution piece, making that execution piece through humans, other than the digital part, whether it is your call center or if you're, the collection agent on the ground, or the lawyers, legal, etc. To make that process efficient, that process, enormously can be made, efficient if you use the data appropriately. But like starting from your, making your collection strategies through data rather than through experience and through kind of intuitions, and then making sure that it gets executed on the ground at the call center level. Like I mentioned, if you have a system, which we do is that if all the calls get monitored on a real-time dynamically, and then get the inference out of that and use that intelligence on a real-time basis. Similarly, you have your call center agents being tracked, and then that intelligence, your GPS tracking or all those things, intelligently taking a pattern of that and then use it, for the managing them in a more effective way. These are the, but at the end of the day, the success is depending upon how you execute it. The rest of the things, what the data can do, what the AI can do, etc., it can only that much. The most important piece is how do we execute it. And like I mentioned in the beginning, for the financial institutions, they don't care, whether you use AI, ML technology, etc. My bounce rate has to be reduced. My rollback has to be increased. My NPA has to be reduced. That's all about execution. But analytics, AI, platform driven, I mean the real time will help in that. Anything else?
As rightly said, human intelligence and artificial intelligence together makes a beautiful matrimony.
I think we are closing it. Yeah, Elizabeth, please. Yeah. Thank you very much.
I request you to hold on, sir. Thank you so much to the moderator and the panelists. May I request Mr. Mukesh Bubna, Chief Executive Officer, Monexo, to kindly climb up the stage. And along with him, may I request Dr. Ravi Gupta, sir, also to kindly climb up the stage and to felicitate our moderator and the panelists of this. Please, sir. So to begin with, may I request Raj MKK, Chief Executive Officer, Credit Nirvana, to kindly come forward. And to felicitate him, may I request Mr. Mukesh Bubna and Dr. Rajiv Gupta to be there on stage. Yes, sir. Moving on to next, may I request Mr. Ajit Kumar, Chief Operating Officer, Credit B, to kindly come forward, please, sir. Okay, fine. May I request Mr. Raj MKK, Chief Executive Officer, Credit Nirvana, who was the moderator, to kindly come forward, please, sir. Yes, sir. And may I request Mr. Ravi Gupta to felicitate him with a memento as token of love and gratitude. Following that, moving next, may I request Mr. Ajit Kumar, Chief Operating Officer, Credit B, to kindly come forward. Yes, sir. Thank you, sir. Moving on to next, may I request Mr. Naveen Galera, Managing Director, Galera Finance, to kindly come forward, and may I request Dr. Ravi Gupta to felicitate him with a memento as token of gratitude and respect. Thank you, sir. Moving on to next, may I request Mr. Arun Kumar Iyer, Senior Director, CEO, CRISIL, to kindly come forward. Thank you, sir. Last but not the least, may I request Mr. John, Business Development Manager, South SMB, Rapider Cloud Solutions, to kindly come forward, and to felicitate him, may I once again request Mr. Dr. Ravi Gupta. Yes, sir. Okay. Now may I request all the panelists, the moderator, and Dr. Ravi Gupta, founder and CEO, Elets Technomedia, and editor-in-chief, the Banking and Finance Post, to join for a picture with the Banking and Finance Post magazine, which is India's first and the only magazine on innovation in the BFSI sector. Can we all give a huge round of applause, please? Magazine. I feel really proud to inform you all once again that the Banking and Finance Post magazine is India's first and the only magazine on innovation in the BFSI sector. Can we all give a huge round of applause to this once again, please? Thank you so much, everyone. Thank you. Moving on to next. With the fintech sector aggressively entering the lending space, The sector is either equipping itself to be more versatile, agile, and technologically advanced, while on the other hand, the sector is also looking at strong fintech tie-ups to reduce stressful assets, quick turnaround time with frictionless experience, and longer and secure customer engagements. So the next topic for panel discussion would be expanding into newer ecosystems with fintechs, big techs, and BFSI relationships. For this panel discussion, may I request Mr. Anil Gupta, Chief Partnership Officer, Earth Impact Digital Loans Private Limited, who's going to be the moderator, following which may I request Mr. Mukesh Bubna, Chief Executive Officer, Monexo, Mr. Anshul Khera, Head of Special Projects, Titan, as panelists to be on the stage.
Hi, good evening, everyone. So once again, I think we are towards the fag end of the program. I think since morning, we've been listening to a lot of information. And I think what is very interesting to see is so much of discussion happening on AI, IoT, ML, etc. What is even more interesting to see is, especially on the expo side, so many new companies coming up, especially in the area of, on the collection, on recovery itself, which itself is very, very heartening to see that. So I think there were a few things that we thought probably, have a quick chat on, especially on the fintech part of it. Maybe I would just ask one question to both of you is, how do you see fintech kind of coming in, especially in the BFI space, right, or the BFSI space itself? What is the kind of impact you think fintechs of today versus what fintech was before, if at all, yeah?
So I think technology always enabled the banking sector. It was impossible for the banks to grow without technology. So, and the fintech word which got coined is those most likely are unlicensed companies. You would have seen recently ED has closed down 100 fintech, right? This whole digital lending without license is something which I don't understand. And that's what they are typically called fintech. Payments, you need a PPI license, right? For most of the regulated entities, you need a license to do lending. Even if I want to lend 100 rupees today, in Tamil Nadu state or most Indian states, individual to individual lending, there's a license required. So that's one side. However, having said that, all fintechs are riding a wave which has been created by the environment. Without Aadhaar and eKYC, fintech would have been not possible, right? Open APIs, which government is allowing to fetch data through PAN card, etc., wouldn't have enabled those. Or for the matter, today what we are seeing, this OCAN, the internet banking, financing coming through, this is all enabled by the government, DigiLockers. So fintechs are actually the ones who are smart enough to use what government is enabling, and the faster they enable, they make the user journey much simpler and faster. So that's what I think of fintechs right now.
Sure. Anshul, maybe something to...
Yeah, absolutely. See, fintech is a term which is in quite a buzz these days, right? It initially actually, even when Visa came into foray, that was a technology which they had brought into, and the credit card which it used some certain technology when it was there. It was a new innovation at that point of time. So technology has always enabled the banking system. I think it is fintechs are actually enablers which help the banks to serve the underserved. Uh, the reach, whether we can just enable it through technology, either the APIs which they use, the banks have opened up the APIs, they use the tech stacks. All of these combined together make the entire ecosystem for the NBFCs as well as the banking sector to grow upon.
Okay, nice. And you think there is, great benefits also having in this ecosystem of various fintech partners on one side, that the banks or the bigger players on the other side, and then the regulators on the other side, or you see also challenges between them?
Yeah. So yes, see, banks are of those sizes right now that it's difficult to change their systems, right? So they have been working in quite traditional ways. The acquisition has been in traditional ways. The whole risk management has been quite traditional. Rather than changing its own systems, it is now relying on certain technological companies which can actually facilitate those functions. Just to start with the eKYC, CKYC is the PPI interoperability among the various companies, right? So all of these are actually helping those in a one direction.
Mukesh, maybe something.
So the point here is without the ecosystem, and for banking, if I may use the word, it's experimentation. You can do experiment in-house or you can do experiment outside. So partnering with a bank and fintech, it's a good experiment. If it fails, it's not their problem. It's that brand which failed. If it fails inside, there's a lot of answerability. So it's a small test. And if they can learn something, they surely can be agile enough. Banks are very agile. I've worked with bank for 20 plus years. I think we keep blaming them that they're not agile. They're very agile. They're very risk averse because they have to be answerable to so many different people, regulators, shareholders, their employees, right? We've seen what happened in 2008 when all the banks took the risk, right? And there was banks which are closing down in US, etc. So they want to be agile. That's why they partner. When they learn it, they can do it very well inside because they have the muscle power of money, the best teams, and first of all, the most important, trust of the customers, right? So they can do it. They just do experimentation outside.
And any examples in your business that you see, this happening?
So I'm actually a disruptor of the banking industry. I'm a peer-to-peer lending company. So I take, in a way, I wouldn't use the word deposit because if anybody's from RBI, they'll take me away. But I take money as an investment from people and I ask them to lend to other people. So I'm in a way taking away CASA or a saving or a fixed deposit and asking them to take the risks. Now, if I gave you a statistics, close to 12,000 crore of our deposit money into the banking system has gone to another NBFC to lend out because the banks are not able to deploy that money quickly. Similarly, 6,000 to 7,000 crores of debt mutual funds have gone to NBFCs for lending. That's the two large source of lending money in India. We thought we were giving to a debt mutual fund, they'll do something else, but at the end of it comes to lending. So what I'm trying to do is disrupt these two ecosystems. Why do you give money to a mutual fund? Mutual fund gives to a NBFC, NBFC lends, and in this whole process, you get a 6% return. You come to me, I'll give you 13% return, right? I'll take away the margins from these two people. So that's why the banks will never work with me. They don't like me. For me, they are utility, not beyond that. I have to keep my money in the bank. I have to disburse money for the borrowers in the bank. My investors transfer money from their bank account because I don't touch cash. For me, they have literally turned, as Bill Gates said, banking will turn into utility. They have turned into utility for me.
Very interesting insight onto that. And Anshul, I mean, you setting up a new entity altogether in India, right? So maybe we could listen a bit on what is this entity going to do and how are you, meeting up to these challenges in this ecosystem?
Yeah. So Tide was founded in UK, right? And it is focused. It's a business financial platform focused on serving the SMEs, the MSMEs who are running, and the banks have not focused towards them much. Right from banking, accounting to expense management to invoicing to lending to, let's say, even investing, right? So it can serve all in a single platform itself, right? Similarly, in India, there's a huge market of SMEs which are quite unserved. We have seen that, especially in terms of lending, we are dependent on the CIBIL scores and the others, right? But with a lot of footprints, digital footprints, which we call, right, we can actually serve them quite well in India as well.
Okay, very interesting. So, I run an NBFC also, Earth, and one of the challenges that we face is while we do lending, we ourselves are part of an ecosystem where there are many stakeholders in that, right? Some for CIBIL, some for KYC, some for learning and development, some for basic LOS, LMS. Do you see, or let's say, do you foresee challenges or any kind of hiccups that can come in, especially, when you are trying to give a very smooth customer experience? We are talking of now networks of network, right? The way you have defined customer experience in your journey is part of maybe subset of many other, entities of other fintechs which have come in. So do you see any challenges or how have you kind of encountered this?
So yes, everybody depends on somebody else's API, and that's a opportunity as well as risk. Opportunity is why reinvent the wheel. It's not that as a regulated entity, I can't go to Aadhaar and ask for being a KUA. But it takes time, and Aadhaar keeps changing. Then you need a human resource to keep track of their changes and keep changing it. There's a company which has mastered that art. We look at it. The risk is security. And each organization has to evaluate that very, very critically in this whole process, because at the end of it, that partner whom you are, he's unregulated. He's a software company, but you are regulated. And once that regulator comes to you and finds out that your security is breached, what regulator will do to you, you will lose your business for life because customers will never trust you. And we are having that issue very regularly in India nowadays. So I think security starts from be as owner of the company, and we have to build systems, processes where that security is very, very strong.
Absolutely right. Security, the whole banking system is based on trust, right? Right from the beginning, be it money lenders, be it landlords, be it anyone, right? So the trust has been most important factor. With the help of technologies, we have been able to curtail certain risk on that aspect. We can build some robust systems which can really take care of all these. But as you mentioned, the networks of networks, as we move forward, we want to improve the customer experience. The UI is in our control, but as we talk to the end user, the whole journey is again not entirely digital. So someone mentioned the word phygital, right? So I think when we are dependent, not just the APIs, but even when we are dependent on lots of partners to do the end service, there it can be a broken flow. So to control the entire ecosystem might not be in just your hands. So we can make it as smooth as possible, but as digital as possible. But again, be it regulatory or be it the extent of how much we can solve digital, it is still not 100%.
Okay. And you did mention about your company setting up, all these programs. How do you see, fintech like yours evolving in terms of the technology adoption with various banks, right? In terms of integration, APIs, in terms of the whole cooperation. So what more do you expect, let's say support coming in from the banking or the finance industry?
Absolutely. See, already I'll say RBI currently is a very good product manager, right? So it is launching a lot of new products, right? It is launching the entire processes. It is streamlining everything. The entire tech stack which they have opened up is really in the right direction. But obviously, as my colleague also mentioned, that we are dependent on banks. We tie up with the different banks. We tie up with the NBFCs for the lending part, right? So obviously, the entire network will become more smooth when, let's say, with the account aggregators coming in, and as well as such schemes would really help everyone in the ecosystem.
Perfect. Mukesh, some input from your side.
I think RBI has done a fantastic job in the last decade. I was in Hong Kong, I was in Singapore prior to that. The kind of innovations we have done, and as they say, we can't import innovation from US or anywhere for India. We have to innovate for our country because our country changes every 100 kilometers, right? We can't be, while we all may be having a Apple phone, but our customers don't have Apple phone, right? And recently when we heard about UPI coming on the dumb phone, right? The old Nokia, that is not unthinkable in any other part of the world. And I'm quite sure that innovation will go to Philippines, it'll go to Middle East, it'll go to South Africa, where still dumb phones are being used. So I think we are innovating not only for India anymore, we are innovating for a lot of countries where the GDP is maybe less than 2,000 US dollar, and there are a lot of countries per capita GDP is less than 2,000 per annum. Beyond that, if you look at the sandbox RBI approach is there, the NPCI taking us to France, etc. We are far ahead. I just wish few more things we did for customer privacy. I don't think so. We treat customer privacy very well as a regulator, whether it's TRAI, whether it's RBI or anybody. They have guidelines, they have regulations, but I think time has come that people should be fined in a very big way. I get at least 5 fraud messages every day. It says HDS, I don't even have an account with the bank, but it says, please click here to do your, and that's a broadcast. Somebody should be able to figure that out and close that. I have registered myself, TRAI as do not disturb, but I get 10 calls for giving me loans. I don't want one. When I want one, nobody wants to give me, right? So I think the regulators have to do something about these things, which is very basic now, and it's getting irritating in India, right?
Thanks, Mukesh. I think it's deep insight into each of our areas. I remember long back, I think 2001, when I moved to India and was trying to bring this concept of bank going out of a bank branch, to do small ticket loans. And that was a time when people wondered in India, like, how can you do banking outside a bank branch? Someone said that, how can you make India, a thumb-based Anguta chap kind of thing, right? These are the words spoken, and today we all have financial identity, a social identity, and the very fact that even a 1 rupee transaction is done, through UPI, something we took almost 8 years to debate back at, some great institutions in India. But that's how the disruption has happened, and I think fintech is playing a very big role together with the regulators, and I think the regulator itself have become very tech-savvy, tech-centric itself. And I think that's the way we are going forward. Our kids today buy stocks and they tell us when to buy, when not to buy. And my demat account with the bank is still being looked after. I don't know when it's going to open up. So I think, so I think very promising. Thank you so much for, being here. And we look forward for your success in India. and of course, Mukesh, for yourself. Thank you so much.
Thank you. Thank you so
Pleasure.
much.
Thanks. Thank you, everyone. Thanks.
Well, thank you, sir. And can we all have a huge round of applause for the panelist and the moderator there, please? Okay. So following this, yeah, may I request Dr. Ravi Gupta? Is he here? Okay, so may I request Kishore V, Director Solution Sales from Skit AI, to kindly climb up the stage and to felicitate our moderator, Mr. Anil Gupta, Chief Partnership Officer, Earth Impact Digital Loans Private Limited. Please, sir. So we also have Dr. Ravi Gupta joining up the stage to felicitate Anil Gupta, Chief Partnership Officer, Earth Impact Digital Loans Private Limited. Thank you. Following that, may I request Mr. Mukesh Bhubna, Chief Executive Officer, Monexo, to kindly come forward. Please, sir. Following this, may I request Mr. Anshul Khera, Head of Special Projects, Tident, to kindly come forward. Thank you, sir, and I request all of you to kindly join for a picture.